So this is insane today. If you have cash, you're a king, or well, kinda, because before today the market's been doing pretty good. But if you got some extra cash on hand, potentially look into nibbling on this dip right here. I would love to say that the dip is completely over, but that's why I recommend dollar cost averaging. Potentially look for some stocks, or specifically, you should make a watch list right now of stocks you want to watch the next few, I don't know, weeks, or always have a watch list of stocks you really want to buy the dip on. I have one of those watch lists. Oh, I think Amazon's a pretty good stock to buy the dip on. I mean, 28 forward PE. I mean, hey, that's pretty fair for an Amazon. So, buy it on sale now. But yeah, I have this watch list right here. I'm looking to buy these companies. Uber, man, not financial advice, super, but Uber is a steal. I should start the whole stream out by going over Uber. 10 times, well, actually, you always look at the forward PE. A 24 forward PE on Uber. I'm talking like that is so fair. I'm legit gonna buy this in my Roth IRA, I think. But check this out. I'll go be really quick about this. Check this out. Hey, what up, Lester? Keep buying the dip. I'm out of money. Yeah, I can't wait till I get paid next. I hope the dip stays till that moment. But sometimes what some people like to do, if you don't have any cash on hand, and I've done this before, you really evaluate your portfolio. If you're just like, you always have a stock, you're like, all right, I might kick the can to this stock eventually. Like Pfizer, 7% yielding stock I shouldn't really own for my age. What you could do is, I really bought Pfizer at the time because there was no good deals elsewhere. I'll eventually sell my Pfizer position and put that into a stock I think will return me a much higher yearly CAGR. So yeah, check this out though. Let's get back to Uber stock. I think this one looks very interesting to buy the dip on. It's either monthly active consumers, not just monthly active users. Monthly active consumers are 189 million. When this exact same time last year, it was 161 million. So that has greatly increased. We can see like they're in mobility, delivery. Yeah, delivery revenues like Uber Eats. Look at that growth in the middle here. Uber Eats revenues up 29%, after grew 18, after grew 6. So that's like growing its growth rate. Mobility revenues up 19. Like those are impressive double-digit growth rates. And it's not like they're just growing their top line, but they're growing their bottom line, their after-tax net income. Well, they had a little one-time adjustment this quarter. Says they made 6.65 billion. That was a one-time adjustment, but they actually made 1.1 billion dollars of real net income. So that was kind of the good news there, and not just net income too, but FCF, which stands for free cash flow. Uber prints free cash flow. So that's why I like this one. They also have a big stake into Grab, which I love. But yeah, some of these other names, Uber is a really nice one. BlackRock is one I kind of want to own. And Arm, dude, I wish Arm would fall more. Oh, and I heard an interesting thesis earlier. Someone said like Apple right now might get rewarded for not spending at all on AI. So if we go to Apple right now, is Apple green on the day? No way. Wow, look at that. Apple's slightly green. Apple, I think, is going to be rewarded for not plowing money into AI. Like Meta spending 25 bill a quarter, Amazon spending like 30 bill, but not Apple. They're spending nothing. And I think as LLMs just get more commoditized, Apple's just going to be the winner as it gets so cheap. But anyway, Apple's an interesting one. Again, that's a great stock to just buy, never sell. Hey, Nathan, I'd watch you on YouTube, but it's not on there. Can you check it, please? Actually, it just went up. If you go, by the way, I'm streaming on YouTube and TikTok. It just went up. Sorry about that. It should be good now. Let me know if you can't find it because that would be weird. But yeah, anyway. And thank you so much. Why is NVIDIA gains all gone? So here's what was disclosed. If you're wondering what happened so suddenly. So, and I'm still trying to study this exactly, but basically yesterday when NVIDIA reported earnings, it had their numbers that come out. But then this morning, the 10Q hadn't disclosed this thing I'm about to explain. They reported earnings right there, but then this morning they dropped the 10Q, and it basically said their inventory, their paid inventory ready to deliver products have doubled, and their I don't even know it exactly. It's another thing with CoreWeave, like the whole circular thing where they're giving money to, it was with Anthropic, I think, but CoreWeave, Anthropic, they're giving them money. So it goes to Microsoft Azure Cloud, and then Microsoft Azure Cloud, and it just buys a bunch of NVIDIA chips. So basically, NVIDIA is giving out money, and most of that money is literally coming right back to them in terms of NVIDIA chip sales. Something like that. I don't know. It's okay. Now, hey, what up, Hey, thanks so much. Hey, what up, B-Tish? Good to see you. Someone said BURCB stock. Yeah, if you guys got any stocks you think we should buy on the dip, let me know in the chat here, and we'll check them out. So, yeah, here's Burnham Holdings. Not sure about this one. I'd be very careful with this one. $55 million market cap. Looks like they just IPO'd, or they're about to IPO. I don't know. I wish I could give you thoughts on them, but I don't know. I guess we can see a few of these numbers here. They did 58 mil of revenue and they made net income on that. So they are making net income every quarter. Again, and I don't even know if they've IPO'd yet. Engages in heating, ventilation, and air conditioning with thermal and interior comfort solutions. Maybe I do like this industry. That's the thing. Is a holding company which owns multiple separate subsidiaries doing business in the HVAC industry. So you know what? We'll check them out. We'll add them on the watch list. Yeah, hey, sorry if the stream's lagging. Yep. It happens every time. There we go. Okay, we're back. Sorry if it lagged there. It was my fault, but we're back now. Okay. What's happening with the market? All red. Yeah. Nvidia kind of, I guess the sentiment is just not in our favor today. Yeah, look at our portfolio. Yeah, I haven't even done a portfolio update. Yeah. So here's our main dividend-only account where every stock in here pays a dividend. But as you can see, most of these are like dividend growth names. What's crazy was Google at one point this morning was up like 4.7%. Now it's just went negative. This speaks numbers. McDonald's is green on the day. Same with Coca-Cola. That's why I love these defensive names. You know, McDonald's does great in a recession. You know, they're actually a real estate royalty company. Whenever you go into a recession, they always acquire cheap land. And historically, in a recession, sales of McDonald's go up. People stop going from Chick-fil-A to Texas Roadhouse, and they go to McDonald's, and the value is now back. But yeah, if you go spend $100 at any McDonald's, $4 of that goes back to this company as legit a royalty, the corporation. And every franchise, they collect rent from them. So even in a recession, those franchises still pay rent and they collect the royalties. So that's what's so cool about McDonald's business model. Not a lot of people know. We have another healthcare name that's green on the day, but yeah, most of Iron Mountain. I figure out what happened with Iron Mountain. You're not going to believe this. I bought the stock. I bought $800 of the stock right before this happened. Like a couple hours later, an hour to 2 hours later, a Gotham short report came out. Oh yeah, it's right here or something. Iron Mountain shares are worth no more than $23 to $41 a share, says Gotham City. Gotham City did this whole short report thesis about Iron Mountain. This is one of my favorite stocks to buy. I got to look more into that. But actually, a Wells Fargo analyst came out to say, and Iron Mountain defended at Wells Fargo. An analyst came out and said they're just completely wrong about that short report. So it's interesting thing that's happening with them. But yeah, anywho, that's our Roth IRA. Here's our, and then we'll get to some of y'all stocks in here. What's up, y'all? Here's our Moomoo portfolio. This is known as our buy, never sell account. Where once we buy a stock in here, I try not to ever sell it. Legit just kind of diamond hand everything in here. Yeah, look at Coca-Cola consolidated, or they're had an all-time high today. Kind of crazy. Despite they have the DNA of like a multi-bagger. I wouldn't probably buy it here, but if you guys want to know what's crazy, they just bought back. I've never seen a company do this. They bought back 22% of all the shares that exist about 2 weeks ago at $127 a share. $127 a share. They bought back 22% of all the shares that exist. Pretty nuts. Okay, let's see here. Hey, Luffy, what up, dude? Yeah, we got rug today. What does IREN do? This is another, ooh, wow, look at that. They're actually green on the day. I suspect because NVIDIA did something where they're guaranteeing, this was with Corey, if I'm not sure about Iris Energy, but maybe, oh, wow, IREN secures GPU service deal with Microsoft. What this probably means is, Microsoft or NVIDIA would buy back the unused capacity, the extra. What did I just click? There was some really cool like time date I clicked. I wanted to get back. How did I do that? I don't know. That was cool though. I like this AI thing, but anyway, here's Iris Energy. They own basically a bunch of data centers, a bunch of GPUs, and check out the revenue right here. It has gone crazy. The revenue went from 52 mil to 240 mil, and they now have customers wanting their servers to host like Microsoft Azure Cloud is hosted on some of their data centers. I believe in, I forget what other customers they have. Let me actually go up to their earnings hub right here. Let me see oh, never mind. They don't have that. But this is the best part about Iris Energy, just how explosive their top line growth is. Revenue's up 355% year over year. That's what I think justifies a lot of this crazy stock price appreciation. Like, it's not like fake numbers. Like, they really have crazy revenue growth, but they're still struggling to get net income positive. They had a little one-time adjustment this quarter, making them look like they made 380 million. They actually lost money this quarter, but the past 3 quarters before this, they were actually net income positive, making like 10, 15 mil a quarter. Good balance sheet, good customers. I think they have like a crazy backlog. I know. I know CoreWeave has a $55 billion backlog. Okay, what do you think Bitcoin's floor is? It's. I think Michael say it's tough to. Wow, 86K. I don't know. And I'm not buying the dip on Bitcoin. Honestly, from a technical point of view, it might be worth to nibble here. Oh yeah, we were on the weekly chart there. Yeah, the daily. Bitcoin's always moved kind of like a triple beta QQQ, like a TQQQ. Let me see if that kind of looks right. Let me see if I'm just wrong. Yeah, look at that. You can kind of see Bitcoin is like a triple. You can kind of see it rhyming here, but Bitcoin is kind of like a triple beta Nasdaq. So they're really interesting. But I heard this is kind of interesting, like Shopify, for example. Let's go pull out them. If you owned every share of Shopify that exists, like you bought every single share of Shopify that exists, what are you left with? You're left with a company and with revenues and net income. But with Bitcoin, let's say you buy every single Bitcoin, all the Bitcoin in the world, you're not really left with anything. So actually, what I'm trying to say is I prefer stocks. Like I feel like I know how to buy the dip on stocks better. And with stocks, they can like pay dividends, share buybacks, all that. A lot of Bitcoin is lost. I actually really like Bitcoin's bull case. Sorry, I'm chugging this ginger tea here. It's delicious. Okay, so here's Shopify. Owned by Kathy Wood. I wish I owned Shopify. Used to have a Shopify store, and I paid for their max tier subscription. Even if you pay for their max subscription, and it's even worse if you don't pay for subscription, they collect 0.25% of every single sale as a royalty. So literally, they just collect royalties every time you make a sale or anyone makes a sale on their platform. They get 0.25% of it. But check this out right here. This is their annual revenue growth. This is what's crazy, and this is what I love about Shopify. I mean, every year it just hits a new record. So that's what's so impressive. And not just, the top line, but the bottom. Oh, so they had a little one-time adjustment. So you look at the operating profit, they're printing money and the growth rate's insane. Like they're legit making a couple $100 million of net income a quarter with a fortress balance sheet. So, and they're not even, I do like Shopify a lot and I'd love to own them. I really would. What's another interesting one is actually eBay. And it's never a stock I thought I would ever want to own, but they are 18 PE. You get a 1.5% dividend and they do crazy share buybacks. Let me actually see the buybacks. Net income was negative 0.32. But the EPS was up 4.65. So they bought back 5% of all the shares, but it's kind of lost its growth. But one interesting thing is like eBay, you can now like ship. If you're a seller on there, you can like ship items internationally to customers, and eBay now handles all the logistics nightmares. Like on my Shopify store, when you ship stuff internationally, like you now have like foreign taxes to pay. Like they just handle all that and like weird. Okay, hey, what's up, Nathan? Happy Thursday. Yeah, markets were starting green, but then went red. Yeah, it's because Nvidia dropped this 10Q report that revealed some circular stuff investors didn't like. And it's probably just the momentum of like. Things are maybe just overbought. But that's the thing. Like, that's why I'd look for a lot of stocks to buy the dip on. I'm legit about to pull the trigger and buy another share of Amazon. I mean, 28 forward PE, their current PE, I think is a 30. Yeah, 30 PE. Their AWS growth is nuts. They're a cloud play. They got a, I think $40 billion cloud deal from OpenAI. They got a, huge one from, I forget now. Oh, Amazon Zoox launches autonomous ride in San Francisco. I saw the Zooxes everywhere in Las Vegas by Amazon. It's like a competitor to Tesla and Waymo. So yeah, hey, someone said I bought SoFi. Yo, let's go check out SoFi. Yo, major L's in this portfolio. Yeah, check this out. Hey, yo, what up, Aaron? Do you want me to look? Oh, SpaceXM. Is that a stock you want me to look at? Or I'm not sure. Yeah, here's our Webull portfolio. It's like our risk on account. We've done terrible. Full disclosure, don't listen to me. I'm not an expert. I literally sell nothing. I have no course book. Watch out for people impersonating me. I'll never follow you, DM you, nothing like that. But we're down 3% on the day, and all time open profit and loss. We're only up 6% all time. So yeah, don't listen to me. But yeah, we're down bad. Robinhood got smacked. SoFi got wrecked. Actually, let's go look at SoFi though, because I do own them. We're still up a crazy good chunk on them, and I regret every share I've ever sold a SoFi, but I might get the chance to maybe buy some more. They're still not exactly cheap. The forward PE is a 68. So they trade at 68 times next year's net income. But this is why I think SoFi definitely deserves that sort of premium, because this is what's crazy. This is what justifies SoFi's multiple and why I wouldn't sell the stock. I certainly wouldn't sell it on the dip. I'd actually look to buy the dip. I'd nibble here, not full size, because it probably might go a little lower. Hope not. But I'd nibble here for sure. Look at their financial services growth. They have their own banking charter. They got it through a loophole that's patched because of them. But this is nuts. These year-over-year comps in the middle here, up 80%, up 100%, after it grew 140, after it grew 280, after it grew 600. Like it literally came from nothing. They created this in 2020. It was 3-4 mil of revenue a quarter. Now it's 420 mil the most recent quarter. If you annualize that, that's like 1.2 bill just from the financial services sector. Then they had the lending business that hit a record up 25% year over year. Then they have their technology platform. How's that doing? Up double digits to a record too. Nice. And that definitely beat expectations. We can see the analyst expectations. That's the orange line here. Every quarter they beat on revenue, they beat on EPS, and they beat on EBITDA. So that's why they gap up on earnings day, because they really do beat expectations. Yeah, check that out. They're printing net income, a couple hundred mil. So yeah. So that's SoFi. All right, let's see. Hey, try not to spam in chat there. Yeah, I'll try and get to all these stocks. I have a little few I want to go over. We'll look at should we look at markets making me cry? Hey, what up in Harvey? CoreWeave, eat the dib. Yeah. So here's Oxford Industries. I haven't heard of this company before. This might be a BDC. I might have heard of them actually. But no, that's Oxford Lane. But this is a $460 million company that's a really small market cap. And technically this stock is the same price that it was in 2003. Sorry, my throat is a little bad today. A little sick, but that's okay. What is this? Tommy Bahama. Oh, I've heard of that brand before. Tommy Bahama, like the little $100 candles. I think we legit have like a $99 Tommy Bahama candle, and it just lasted forever. But yeah, it looks like some consumer discretionary stuff. Do they pay dividends? Oh, wow. This is probably what's suffocating them. They have a 9% dividend yield. Let's see if they can afford it. Let's just go look for ourselves. So the revenue, this kind of explains why the stock is doing so bad. Their sales are down 4 after they fell 0.1. It was up 15. So revenue has lost its growth and the net income is starting to decline. Like they actually the whole business lost money that quarter. So on average, let's average it out though. Like 2020 looks like this year was a great year for them. They used to make like 30 mil a quarter, but now honestly, it's like, we'll give them, let's just say they make 20 mil of net income a quarter. Let's see, how much the dividend costs. Okay, and the dividend costs 10 million of net income a quarter. So it actually doesn't suffocate them too much. And they're actually doing some share buybacks, bought back 50 mil of shares. And how's the balance sheet looking? So they have only 6 mil of cash. They got 6 million of cash. No, actually, 400 mil of debt to pay. That's not about the same debt as market cap, but it's not forever. I don't know. The risk reward might be decent on them, but we want to see the growth come back. What happened? Yeah. Hey, what's up, man? Yeah, this is actually a software brokerage right here. Yeah, if you're looking into stocks, and I think today is a great day to buy stocks. My favorite brokerage to buy stocks on. It's in the link tree in my it's in the link tree in my bio. That very first link there. Okay. Let's do CoreWeave. Oh yeah, it's all these are. I didn't know if you meant. I also have Webull linked up there and Robinhood. They're all brokerages where you buy stocks, and they all ask for your information and send you a tax form. But this one, honestly, my favorite out of all three. Very first link there. So let's pull up CoreWeave right here. Oh yeah, another cool thing with this app. I got to get more water because I don't know why. This ginger turmeric tea is like spicy and it's like hurting me. It's not making, okay. So if we go to the NVIDIA portfolio, their largest holding is actually CoreWeave. and they are down bad after earnings. They actually, in their guidance or in their earnings report, they actually lowered their guidance because they said they couldn't get enough workers. CoreWeave benefits from NVIDIA's quarterly performance as premier cloud partner. So yeah, they're actually they're not down too much. Like you'd expect them probably on a day like this to be down more, but they're only down 2.5%. Let's go look at their earnings hub again. Yeah, check out number 2 right here. Their contracted backlog nearly doubled quarter over quarter to 55 billion. They'd have $55 billion backlog, which is crazy. But their operating margins were below expectations, only a 4% operating margin, and that was impacted by delays in third-party data center deployments and increasing scaling cost. So and I looked more into that. They couldn't get enough workers. But here's what I love about CoreWeave, why they're certainly interesting. Check out the growth of them. Oh, we'll look at Duolingo too. The sales went from 580 to 1.3 billion, and this was a record 1.3 billion. Analysts are expecting it to be 2.3 billion in just 2 quarters. Analysts are still expecting them to lose about 200-300 mil of net income a quarter. But what's interesting is on the operating profit, they're actually positive, but yeah. So their expenses are high right now. But anyway, CoreWeave certainly interesting. There's no PE or forward PE because they're just supposed to lose a lot of money for a lot of time. But you're buying them for the top line growth there. All right. Oh yeah, I wanted to get to DOCM. What up? What up, New York? And then we'll get to Duolingo. What do you think of quantum stocks? My favorite quantum play is honestly it'd be Honeywell, Google, and then Microsoft, or probably IBM too. Those, honestly, I'd stay away from the startups like the Qubits, QUBT, RGTI. I'd be careful with some of those smaller ones. But here's DigitalOcean. This is a cybersecurity play, and they have been doing phenomenally. They reported earnings and gapped up, reported earnings gapped up. They are one of my favorite cybersecurity stocks out there. I wonder if Jeff Mack's in here. I know he loves this one. But yeah, check out this. They beat on revenue. They had big beat on EBITDA. This was a slight one-time adjustment, but it was a huge beat on EBITDA. Expected 59 mil. They did 64. But even before today, they're always beating on EPS. So if we just go to this company's net income again, it says 158 mil. It wasn't that high, but it really did grow 82% year over year, still to a record. So basically 44 mil of net income before taxes, and you subtract like 4 or 5 mil for taxes. But yeah, the net income growth has exploded, these year over year comps. And don't worry about this debt. They can actually pay off the debt relatively fair. They actually, whenever they get cash, they spend it all on share buybacks. Or historically, they used to plow money in share buybacks. But yeah, that's what's cool about this one. I like DigitalOcean a lot. So yeah, Honeywell is actually about to IPO. If you go to their investor website, and I wanted to do this on stream one time, Honeywell, they're about to IPO this quantum. It might literally be the best quantum play of all time. I don't know. But the presentation was so interesting. So here's Duolingo. This is that language learning app, and they're getting whacked by AI today. Well, actually, they've been getting hurt just from the AI thesis because their actual numbers are great. The numbers they report are really good, but it's the AI thesis hurting them. OpenAI is creating a Duolingo competitor, and people go to Duolingo to learn a language, and you have to pay for a subscription to really learn languages. But maybe in the future, like Google's has one too now, where you can just learn languages for free. So maybe the expectation is maybe the future growth is uncertain, and their subscription numbers are going to go down. But for right now, that's not happening. The subscription numbers are growing way better than I ever thought. Like, this is why I'd buy them today. Not financial advice. I'd nibble on them, but the subscription revenue is up 45. After grew 48, after grew 45, after grew 49, after grew 53. It literally hits a new record every year, every quarter with phenomenal growth rates. And if you don't pay for their subscription, you see ads. We go to their advertising revenue. It's up 45, 55, 30. So all businesses are growing over here, beating on every expectation every quarter. But yet they're getting hurt by the AI thesis. Yeah, they just completely deleveraged too. Basically no net debt now. So what's the forward PE? Forward PE of 37 might be. Oh yeah, because remember, if we go back to it says their right now PE is a 21. It's not actually a 21. Remember, if you go to their EPS right here, they had that one-time adjustment. It says they made 292. They didn't actually make 292. They made 35 million, which still grew a staggering 160% year over year. So that's everything here said in the right direction. I'd nibble on them. I don't own them though. I might actually look into doing that. What happens is, hey, again, this is a brokerage where you buy stocks. Hey, great day to buy stocks. If you want to get this app, it's in the link tree in my bio, that very first link there. Hey, what up, Cruz? Good to see you, homie. Down 15%. Man, where are you seeing the buying? Oh, 50% is this all-time high. Yeah. Would you rather be what up, Voxnell? Spread the wealth. Shout out to him. He said, glad I sold my Google and Apple calling the pump. Yeah, dude, look at this. This morning, Google was up nearly 5%. Check this out. This is why investors are freaking out. Well, at the end of the market's not too red. Well, actually, yeah, it is now. Earlier it wasn't, but it just keeps going lower. Yeah, we're down 0.9%. And it's even worse because we were so green at the beginning of the day. You know, Google was up 5. Yeah, here's our portfolio. We're down 0.85. We have a Roth IRA that's down 1.82. Iron Mountain took a beating. Cormedics did. HCA's up though. Our healthcare play, and Webull, interesting stock to buy. Now they report earnings today. They report earnings in 3 hours. So I recommend this one to put on your watch list, but I wouldn't buy them probably today. It's a bet into earnings, but I really think I think Webull stock right here is going to beat on earnings. I think the analysts are wrong because I've been using Webull. That's this brokerage right here. I've been using this brokerage for many years, and full disclosure, look how bad we've done all time. We're only up 7.2%, down 2.8% on the day. But Webull just added in this prediction market stuff, and they added crypto back to the platform, and they have this advisor stuff that they literally copied from Robinhood. Like, as a Robinhood shareholder, I'm like, dang, Webull is coming for them. And so that's where they make a juice of a margin, juice of a commission. Whenever you buy and sell a stock in a brokerage, they don't make too much money, like a fraction of a penny. But whenever you do this prediction market stuff, which has worked so great for Robinhood, that's what's led to most of the net income growth is the money they're making off that and crypto transactions. So pretty interesting. That's why I bought them. Okay. They are, okay. Let's see. TNDM. Let's check these out. Can we speak a bit about Powell? Yeah, wait. Do you mean Powell Industries or Powell TNDM here? So this is a Tandem Diabetes Care. Interesting. So they're a $1.3 billion company. Yikes. The stock has not done too well, but these healthcare names are defensive. Like, look at that. It's actually up 3.7% on the day, but I guess that's after it fell a big chunk. But let's see if they have numbers. So they owe pumps. So pump revenue actually fell 4% year over year. And the supplies and other grew 8.5%. So when we combine the two businesses together, the total revenue only grew 2.1%. And they're still losing a bit of net income every quarter. So that might be why the stock hasn't done too well and it's kind of been flat for since 2018. Yeah, they're worth $1.3 billion. And yeah, their assets are going down. Their leverage is going up because they're losing a bunch of net income every quarter. And the growth is slowing a little bit. So they're interesting, certainly interesting. But I don't know. I own Cormedics, which is an interesting one, catheter play. HCA Healthcare. This is the for-profit hospital group. Ethics, I don't know how I feel about this still. But literally, when I'm talking like, I've analyzed so many stocks in my lifetime. I've never seen a company with better financials than theirs. Like, they legit, in terms of just quality fundamentals, financials, I didn't mind buying them at all-time highs. We bought them just last week. So, okay. Ooh, Microsoft. You know what? Let's do Microsoft. And hey, Looney, what up, homie? I have 10,000 at VOO. Look at SMH. Oh, there's so many stocks I want to look at here. Yeah, so the SMH, this is, if you don't know what semiconductor play to buy, like if you want to buy the dip on the semi industry, like, and if you're like, I don't know, do I buy the dip on Nvidia, Taiwan, Broadcom? You don't know. Well, you could just buy the SMH ETF, which is just a basket of the whole industry. And it's done phenomenal. But let's check out Microsoft real quick. We'll be kind of quick about this one. I think they're a steal. If you have the intention to never sell Microsoft, it's worth buying right now. Oh yeah, hey, what up, boss? Give me the ticker symbol for British American. I can't really cover that industry because of that last word there. Whenever I say that, I get in trouble. But yeah, anyway, the forward PE is a 29 on Microsoft. For a Mag 7 AI toolkit of the future, every single company in the world uses Microsoft in one way or another, pretty much. This one's worth buying. Oh yeah, they have this productivity business, which is your Office 365 software solution stuff like PowerPoint, all that. So they've converted from like a hardware company selling computers to a software company. So it's over 120 billion of annual revenue, just hits a new record every year, every quarter. And then they have what's been super growthy is their Azure cloud, their intelligence cloud business. Check out these year-over-year comps. It's at a record 30 billion of revenue. Amazon's was at 33 billion this quarter. So they're like, AWS is number one market share. Then I think it's Microsoft, then Google. But yeah, they just beat on every metric every quarter. Better credit rating than the literal U.S. government and the U.S. as a country. They say Microsoft is safer credit rating, payback guarantee. So, okay. Okay, let's check out POW right here. Webull is Robinhood 2.0. Yeah, I love the chats and the comments on Webull. This is the not so intelligent comments here. So let's check out Powell Industries. They're actually up 5. Wow, I didn't know they were doing so well. Well, that's after they tanked yesterday, probably. But they're up 6% of the day. They had phenomenal earnings. Well, it was a mixed bag, but from the analyst expectation, they beat. So they beat on revenue, they beat on EPS, big beat on EPS, and a beat on EBITDA. It was a triple beat quarter. Sales were up 8.3, net income was up 11. So they were still able to grow the gross margin 7%, grow the net margins 3%. They have literally no debt at all, completely debt-free company, $475 million of cash. And that cash isn't just doing anything. The cash earns them interest. They made $4.3 million of interest. They literally made $4.3 billion of interest a quarter. And the dividend only cost $3.23 million a quarter. They literally make more interest on their cash than the cost of their dividend with no debt, doing a little bit of share buybacks, but not much. So yield's kind of low, 0.35, but they have so much future room to raise the dividend. The valuation, the PE is a 20. They trade at 20 times PE. So I do love Powell Industries. I've made so many YouTube videos about them if you want to learn more. So I want Microsoft above 500 again. Hey, yeah. What about Google? Yeah, Google. I think Meta's a steal. Hold on here. Actually, give me 1 second. I don't want to dox myself here. Sorry about that. Hold on here. Okay. I'm glad Robinhood did that. I don't know what I clicked there. Okay, what was I going to look at here? Let's see. Hey, what up, Looney? Good to see y'all. What up, Luke? Good to see everyone. Brian, Paul, good to see y'all. Hope y'all are having a great day. Anyone with some cash on the sidelines is, I think it's worth nibbling on a few companies. What I do right now is I make a watch list of stocks you want to buy. One stock I think is a quality one to certainly honestly nibble on now is Uber. 10 times PE, well, that's actually inflated up a little, but a 24 forward PE on a quality company as Uber, who owns Grab, who has a stake in some other companies as well. Uber's one you want to buy the dip on, not financial advice. Google, Meta, these all are. Let's actually do Google stock real quick. We'll be quick about this one. It's literally like a mini OpenAI in one. They've kind of beat OpenAI at their own game. Their Gemini 3.0 model is actually better than ChatGPT's best one, and it just came out today or yesterday, I believe. But yeah, ETF in one. You know, back here they were priced as an AI loser. OpenAI is going to take them over. Now Google has just implemented it better, you know, in Gmail and all these different things. But anyway, if we go to their Google services, which is YouTube, the Google Play Store, Android, everything, those revenues was at 87 billion at a record. Advertising revenue up 14% year over year. But then they have the Google Cloud business, you know, that's growing very fast. It's up 33%, after grew 35, after grew 27, after grew 43. And the cloud business, they just got so many new cloud deals like just recently. So yeah, as we know, the whole cloud industry is kind of booming. But yeah, Google prints money. Here's why Google stock never goes down. You want to know, well, in the long run, just why Google stock never goes down. They make 30 billion of after-tax net income a quarter. And what is Google doing with 30 billion of after-tax net income a quarter? These buybacks are so accretive, especially for what the stock is right now. Just for all of eternity at the top here, they spend 14 to 15 billion dollars every quarter just for all of their lifetime solely buying back their own shares. And then they also now started paying a dividend since regulators can't really allow them to buy any company. So they're like, all right, we'll return a bit of our money in a dividend now. So they pay a dividend. Only costs $2.5 billion a quarter. Again, Google made $35 billion in net income, or they make $30 billion a quarter. The free cash flow is really, yeah. Whoa. Cash from operating activities was $48 billion. Sorry, Mom. I'm streaming right now. I'm gonna get in trouble for that one. But yeah. Anyway, Google's spending a lot on AI now. 28 bill this quarter, 25 bill last quarter. So yeah. Anyway, I love Google. Okay, no Fed cuts. Actually, we can go check the. I remember what it used to be. I'm actually very curious to see what the rate cut expectations are. We'll check super quick here. So for the December 10th meeting, whoa, it's now higher. It's a 58% chance of no interest rate cut. And then let's see the January 28th meeting. So still a 50% chance of a 25 basis point cut there. But wow, 60% chance is now no rate cut on December 10th. That would be interesting. But anyway, let's see here. I'm missing so many stocks. I apologize to everyone. I'm trying to get to, if you got any stocks in the chat, re-say them in the YouTube stream and I'll try and get to them. Hood is the best buy here. Yo, Hood is a phenomenal company. They deserve this crazy stock price appreciation. Hey, Promotion, dude, thanks for those gifts there. What app is this? Yeah, hey, by the way, project, this is actually a software brokerage right here where you buy stocks on. If you want to get this brokerage, it's in the link tree in my bio, that very first link there. So here's Robinhood, still expensive, 44 times PE or 44 times net income. But here's why Robinhood deserves that multiple. If we go to the revenue right here, the revenue's up 100%, after it grew 40%. After it grew 30%. So they're on a streak of growth. So the revenue was $1.27 billion. So the total sales were $1.27 billion, and the after-tax net income was $556 million. After the $80 million of taxes they paid, they legit have a 44% net margin now. I can't believe it. Everything there financially is headed in the best direction. So, let's see, Marvel. Let's do Marvel. This is pretty like a cheap chip play. So check this out. What's the forward PE? Forward PE is a 26. So that's certainly interesting. But yeah, the stock has been kind of flat. They're a semiconductor play. They've kind of just been like out innovated by AMD and Nvidia. But let's see. Look at next quarter specifically. EPS. The EPS this quarter, again, EPS is just net income. This 22 cents of EPS is the same as 194 mil of net income. 22 cents. And the EPS next quarter is expected to be 1.36 or 1.36. So the net income is supposed to rocket up. This used to be we could see why this company was doing so bad historically. All for eternity, they just burned through a couple hundred mil in net income a quarter. But what if we now get into where they're making a couple hundred mil in net income a quarter? That's what's certainly interesting about them. Okay. Wait. Yeah, hey, we just looked at Powell Industries like literally 5 minutes ago. By the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. But if you give me another like 10, 20 minutes, we'll look at Powell again. But yeah, I'm so happy with their earnings actually. They had a little slowdown in their oil and gas business, but I kind of expect that to ramp up a little bit. Total, the revenue did look great. So someone said RMBS stock. Let's do this one. Oh, Tom said Adobe. We'll look at Adobe too. I don't know what this stock is. $10 billion company, but the stock's actually done great since 2019. In 2020, the stock was 16. Now it's $90. Wow. Oh, so semiconductor space, it says that's the industry they're in. Yeah, they're beating on revenue expectations every quarter. And they're making net income every quarter. They're making 50 million net income a quarter. Literally fortress balance sheet, no debt, lots of cash. Or let's see how much cash they got. 600. Wow, record cash up from 430 to 670 mil of cash. That made him 6 mil of interest. So yeah, actually, I can totally see why this stock has done so well. Their numbers align with that. Yeah, they had a little one-time adjustment. It says their net income was only 0.6 up. It was actually up 26%. But anywho. Great fundamentals. What's the forward PE though? 38. It's probably fair for the semiconductor space industry. Interesting. Okay. Do you manage your parents' portfolio? No. I think they just own like the S&P. AGYS. AGYS. So this is. Oh wait, actually, I wanted to get to Adobe. We'll look at that after this. So. They've actually done really good since 2019. What is this company? 3.4 bill market cap, Providing software solutions to the global hospitality industry. Okay. So the sales are up 16% after it grew 16. And they really did make 11 million net income. That's after they paid a couple mil of taxes. Yeah. So they're actually making net income every quarter. And do they pay a dividend? No, yeah, no dividend. I actually like that they don't pay a dividend. Yeah, expensive though. A forward PE of 103. So they're trading at 103 times next year's net income. But I mean, the growth is really good, and they beat on revenue every quarter, and the revenue is expected to keep on going up higher. So interesting stock. So let's pull up Adobe right here. Got lucky, sold food to on the pump, now buying cheaper. Yo, I kid you not, I'm about to legit double my position in food to next time I get paid it. I might actually, right when this stream ends, I might actually, and this is what, if you don't have any cash to buy stuff, you can kind of do this to your portfolio. You see if there's any stocks you want to give the boot to. There's certainly some stocks you never want to trim or sell. And that's been some of my biggest regrets, are selling out of quality names like Robinhood, SoFi. But I might actually do something like sell maybe Pfizer or sell, Zoom and UiPath, they're too cheap to sell. TAP maybe just to give more cash, because this one's kind of a boring one that shouldn't. So I don't know. See, and then you rotate it into the tech names, the more high quality names. But anyway, here's Adobe. So dude, super cheap company, 17 forward PE, fresh 52-week low today. Wow. Or multi-year low on Adobe. They're really getting hurt by the AI thesis. They're saying in 10 years from now, will we need Adobe and Photoshop? You know, I know someone who just made a great logo in ChatGPT that doesn't look AI generated. But I'm always a believer that humans are always going to need the final touch on art. And hopefully that'll unprice this from an AI loser to a slight AI winner, probably send this stock up to maybe 350, or I don't know. I'd nibble on this dip, but I would not have Adobe as a meaningful size position, just because there is a lot of hey, yo, Rand, dude, thanks for what is level up sparks, or thanks for that gift there. I really appreciate that. Yeah, heck yeah. We'll look at KYTX after this. Thanks so much for that. But yeah, Adobe, their numbers are still growing nicely. Their digital media revenues up double digits every quarter here. In their digital experience, that's up 9% year over year. I think a while ago they tried to buy Figma, but then the regulators didn't allow it. Now Figma's public. But yeah, they still make legit 1.8, 1.7 bill of net income every quarter. Same with free cash flow. They make $2 billion plus a free cash flow a quarter. So honestly, I'd nibble on this one, not have it as a meaningful size position. And I have a lot of stocks like that. Or as much as I love them, I can't have them as meaningful size positions. Like a Toast right now, or like a PSIX. As much as I love these names, I only put a couple hundred in there. Oh, and some stocks in my Roth IRA as well, like Cormedics and Webull stock right now. Webull reports earnings today. Can't wait to see in 3 hours. Wow, are we having a slight rotation up? Look at that. No way. Let's go. Looks like the market is giving up some of the red. We've been waiting for this bounce right here. Thank goodness. So, yeah. Wow, Google's now green again, and CEG as well. So that's good news. Anyway, let's get back to y'all stocks here. Hey, what up, user? You are. What up, Daniel? Good to see y'all. Sell Pfizer. Yeah, Pfizer's a boring kind of dividend. You're buying Pfizer to not beat the S&P 500. You're buying it to maximize your dividend income. I'm down 40%, bro. Now I just got to sit and wait. Oh, dang. Yeah, we've all been there. Yeah. Okay. I don't know what stock to look at here. There's so many. AMD, let's do AMD stock. All right. This one is one I like better than NVIDIA, just simply because the law of large numbers. And what is NVIDIA's market cap after the dip? Let's go check it out. Here, well, these are my mega cap watch list. I didn't sort it by mega cap. There we go. Largest, yeah. So NVIDIA, the literal whole company of NVIDIA, is worth 4.5 trillion. So if you buy a share of NVIDIA right now, to double your money, they would have to be worth 9 trillion. So, oh wait, hold on. We got to get to KYTX. And I think AMD is like a cheaper way. It's an easier double, I think. But let's check out this stock, KYTX. Yo, shout out Ran. Let's do this one. So they're a very small name, and they're worth $340 million. So they're not worth too much. But let's see. They're developing therapies for autoimmune and inflammatory diseases. Nice. Let's check out the sales. So if we go to the right now revenue, there actually is no revenue. So it looks like a startup. So if we go to the revenue down here, that's from 2022. So yeah, right. They have no revenue. They've never sold a product or a service. So they're kind of in the startup phase, and they're losing 30, 40 mil a quarter. That's the rough thing. Yeah. Whenever you lose net income, that money has to come from somewhere. So kind of look what that does to their assets / their cash pile. Every quarter, their assets are going down. But let's see how much cash they have left though. So they still have 170 mil of cash. Wow. That's actually like only a year left of net income without having to dilute you more. So they have a year left of cash. They're in a rough spot. It's really, it's a bit of hope. Whatever product they're releasing, I wouldn't put a lot of money in that one, but they're certainly interesting. As soon as they start to release that product and have sales, it'll change the outlook. But it's hard to analyze because there is no revenue there. Hopefully that was helpful there. What happens is, yo, what up, Harvey? Yeah, by the way, this is a software or a brokerage where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio. It's that very first link there. Yeah, so IONQ, I don't love this name. They're like a quantum momentum company. Check this. What was so cool about IONQ out of all the quantum stocks? This is certainly one of the better ones, but still one I won't own. They had no revenue before today, but then they diluted you to do this, but they basically bought a company for $1 billion. So they lost $1 billion in net income this quarter, but the growth is expected to just rocket up way higher because they're not like QBTS and IONQ. They actually bought an asset that'll bring us revenue. I don't know. Amazon sold their whole stake in the company. They used to own like 100 mil of them. I wish I'd give you more thoughts on them, but I wouldn't have it as a huge size position. Why does everyone like sales stocks so much? What is SAIL? Sale Point? We'll check them out real quick. Yeah, not financial advice here. Oh, we got to get back to AMD. So yeah, crypto as well. I wish I give you thoughts on like cryptos, but there's no financials or numbers to look at on crypto like Bitcoins. But that's kind of a unique feature of Bitcoin. Like Bitcoin can't miss on their net income or anything. So here's Sale Point. I'm sorry, I'm kind of all over the place right now. But anyway, $10 billion market cap. They're a software as a service is most of their business. Then they have subscription revenue, maintenance, service, and other subscription, perpetual licensing revenue. That's interesting. What does this company own? Or let's see what the revenue is. So the sales are up 33% year over year, and they did lose net income on that. But since they IPO'd, it fortified their balance sheet. Let's go to their website real quick just to see what they do. A comprehensive identity security platform. Let's see. Their website. I don't know. Wait. 51% of the Fortune 500 companies and our customers. So 51% of the basically S&P 500 and 26% of the Forbes Global 2000 companies, I guess, use their software. Interesting. There you go. So, PayPal, yeah, let's do PayPal right here. So PayPal, I kind of feel bad if you own this one because they've not done too well. PayPal is actually the same price as they were back in 2017, and they don't pay a dividend. Actually, I think they just now ever paid a dividend. Oh yeah, there it is right there. It's a little orange dot right there. 14-cent dividend. What's that yield annualized? Let me pull it up over here. Let's see what PayPal's current yield is. They have a dividend yield of, wow, a 1% dividend yield. How much is, okay, wait, what was the dividend again? Let's see what the payout ratio is, or from an EPS point of view. They paid out 14 cents of EPS, and the EPS is $1.30. So about under 10% payout ratio for a 1% dividend yield. That's actually pretty good. I like stocks that do that. But that one reason the multiple is so low, though, if we go to the valuation, the PE ratio, it's an 11. They're trading at this PE where they're not really expected to make or lose you any money because the growth has slowed a little bit. Actually, this quarter specifically was good. They beat on expectations, but before today, like they kind of just grow like low single digits, mid, low, like 5%, 1%, 4%. So, but here's the best part about PayPal. Well, I actually love them. Or well, I'd probably consider them. Look at this net income. They're easily making over $1 billion of net income a quarter. And what is PayPal doing since their shares are the same price as they were back in 2017? What are they doing with all the money they're making? They are deploying it in share buybacks. This is what's so smart of them. If you look at the top here, they're doing $1 billion plus of buybacks a quarter. And here's what it actually does for you as a shareholder. If you're like, well, what's the value of that? Well, check this out. The net income grew 23%. So the net income's up 23, but the net income per share or the EPS is up 31. Again, the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes it is the share part of the ratio. So it literally artificially makes the EPS go higher. And again, the EPS is what you pay the dividend. So it actually makes, so the EPS artificially goes higher. The cost of the dividend goes lower. The PE ratio goes lower. So in short, it forces the stock to go up. But, well, the company can still, do bad and go down after, but okay. Let's see. BBWI, Bath and Body Works. Yeah, well, this stock is down 25% on the day. It's not a stock I'd own before. It's not a stock I would have owned before today, and not a stock I'd really look into, or just an industry I'd want to buy even after this 25% dip. Yeah, wow. This stock, mall stock, Bath and Body Works, they're the same prices they were back in 1999. So you bought the stock in 1999, it's the same price that it is today, unfortunately. But yeah, it's just not really a business model that you really want to own. And this is not the stock that's going to outperform the S&P 500 or maybe temporarily on a cyclical uptrend. But here's the rough part. I mean, the growth is gone, sales, lifeblood of the company. The revenue's down 1%. Last quarter's up 1.5, but yeah, a lot of leverage. That's a lot of debt to pay. They do make net income every quarter, but most of that actually goes to a dividend. How much does a dividend cost? So they're paying $42 million out in dividends a quarter. So I wouldn't really buy the dip on that. Or yeah. Yeah. Hey, try not to spam in chat there. Hold on here. Let's see. Hey, what's wrong, Crispy? Oh, AVAV. I didn't see that. Hey, my bad. Sorry if I missed some stocks here. We're extra busy today. My apologies. So here's Aero Environment. Yeah, hey, what's up? We'll try and get to service now. And someone said, I think Oxford Lane Capital. That, in my opinion, is like a dividend trap. If that's what I think it is. Actually, we'll look at them too. So here's Aero Environment. This is actually a pretty niche company that is on my watch list, because check this out. If we go to their autonomous systems revenue, the data isn't too much, but it did grow 50%. Or if we just go to their total sales, I clicked off it. If we just go to their total sales right here, the revenue just rocketed up 140% year over year. So that's insane. That mostly from an acquisition. If you go to the cash from investing activities, they spent $900 million buying a company. That's what I love. They're acquiring new assets that's going to bring more growth to the business. But look what that did to their balance sheet. That's why and they could have easily afford, like they did add a lot of leverage. Like this was a smart thing for them to do. Good balance sheet. And that got them into the space, cyber, and directed energy industry. So I don't know too much about them. Guess they're in the midstream, or I don't know. Or maybe we can click on their website right here if it'll let us. Integrated. Looks, yeah. So some sort of aerospace, or not aerospace, like a defense company. High altitude pseudo satellites, something like that. Some aerospace. Yeah, interesting. And that's an industry that's kind of been on fire. So Nebius. Oh wait, we've got to get OXLC real quick. So yeah, this is a dividend trap in my opinion. Yeah, look at that. So it's at an all-time low today. So if you're definitely down if you've ever bought this stock. Sadly, and it's like weird. It's like an individual stock, but it's like a fund as well. Like I don't even. Or wait. OXLC, or I guess not. I guess it's like an ETF. This isn't an ETF, or is it? Management fee 2%, expense ratio 12, dividend policy monthly. I wish I could give you more. At one point, there were you were able to view the financials. Like I remember looking at their financials, like revenue, and I don't know. I wish I could give you thoughts on that. Let's pull up Nebius right here. So Nebius, that's a big one owned by NVIDIA. NVIDIA, CoreWeave, Iris Energy, Nebius, they're all the same thing. Bunch of data center. APLD, yeah, too. But yeah, NVIDIA, their largest holding is CoreWeave, and then they own Nebius as 5% of their portfolio. And Nebius, big data center company, they got an $18 billion deal with, or $16 billion deal with Microsoft. So some of the Microsoft Azure clouds are going to be on Nebius's servers. Microsoft didn't want to take on that liability themselves. So let's see what their revenue was. So revenue growth was driven by AI infrastructure and demand a significant partnership with Meta. Well, let's go look at their numbers right here. So here's what I've always loved about Nebius is how growthy they are. The revenue went from 32 mil to 150 million, a 4x year over year. And that was a record 146 mil. And analysts are expecting in 2 quarters for it to be 464 mil. Absolute insane sales growth. And the net income is supposed to narrow. Like right now they're losing 100 mil a quarter, but they're only expected to lose 39 million. So that they're going to narrow their losses, grow the revenue. So they're interesting story. Wouldn't have it as a major size position though. Yeah, this is actually my favorite solar stock of all time. I've looked at all of them, like Enphase Energy. Actually, Enphase just kind of disappointed me, even though I'm not a shareholder, but this is the best solar stock I think out there, the most quality pick. The forward PE is a 12. So they're amazing. But if we go to their net income right here, this is the best part. Out of all the solar companies, they have the best net income, like the ones you can trust. They make easily 300 to 400 million of after-tax net income a quarter. Sales, the revenue is up 79%. Like that's insane growth. After grew 10%. So yeah, it looks like the growth of the solar industry is back, and I think this one's going to benefit the most. They have the best margins. Yeah, they're 28% net margin on this one. So yeah, and they're like the cheapest solar play and the most quality one. So if you love solar stocks, that I'd have that as like my main pick. Palantir, yeah, let's do Palantir right here. Is Bitcoin a commodity? I don't think so. No. Hey, can you look at Toyota or have you? No, let's do. What's the ticker symbol for them? Oh yeah, we can do Oracle too. I know them. So here's Palantir right here. I love everything about this company. All their financials are phenomenal, but the valuation's too high for me to pay. We're not looking at the price to net income. We're not looking at the PE ratio. We're looking at the price to sales. They traded 100 times or 96 times their revenue. And obviously the net income is way below that. But here's what justifies such a high multiple. If we go to their government revenue right here, so many police stations use their software, the military, the Air Force, their revenue is up 55%, after grew 33, after grew 12. Like literally the growth rate is growing over here, but it's more impressive on their commercial side. With other S&P 500 companies, commercial revenue's up 73. Insane, just to a new record. So, and they're not just growing their bottom line or their top line, but they're also growing their bottom line. They made 400 mil of net income this quarter. Absolute monster balance sheet, no debt at all. How much cash they got now? $6.5 billion of cash. So, great company, just too high of a valuation for me to buy meaningfully yet. But they've always traded at a high valuation. So let's see. Actually, I do not own any Bitcoin. Can you do SoFi and NVIDIA? Yeah, we haven't even looked at NVIDIA since the earnings. So we'll look at NVIDIA after this. We haven't looked at NVIDIA at all this stream, actually. Yeah, hey, thanks for all those follows. Yeah, if you guys went hit the follow button, we stream every single day. I sell nothing. I literally have no course book, WhatsApp. Literally, I sell nothing. Please watch out for people impersonating me. I'll never follow you, DM you, nothing like that. So here's Oracle, one of the pure cloud play beneficiary. A lot of the US's TikTok data is now on Oracle servers, which is interesting. Wait, what did that say? Sorry, I'm a little sick right here, but check this out right here. If we go to Oracle, their actual earnings report this quarter wasn't good. Like their net income fell year over year. But it was the future backlog. Their backlog grew 300% in just one quarter from they said unprecedented demand. I think they were projecting 300 billion in annual revenue by 2030 or was it 100 billion? They had some crazy growth expectations. So We'll just see what happens. They do. The thing is with Oracle, why I'd rather, if I was looking for a cloud play, I'd rather own Microsoft, Amazon, or Google as a cheaper and probably better play. But I don't know. Oracle makes $3 billion, or just over, we'll say $3.5 billion. We'll give them the super benefit of the doubt record. I expect them to, I guess, grow to this 3.5 billion of net income every quarter. So they make 3.5 billion net income a quarter. Well, 1.4 billion of that goes to dividends. So they pay a dividend, and then they just issued a bunch more bonds of debt too. But they have over $100 billion of debt to pay, of long-term debt, 155 billion of total liabilities. But I still like Oracle though. You get a good yield, but I actually don't like that the yield is so high. I wish their dividend yield was lower. Yeah, Oracle's really sold off all the growth. That's that's weird. Let's do NVIDIA real quick. NVDA. So NVIDIA is down 1% of the day because this morning they were up 5%. They were at nearly at $200, but now NVIDIA is at 184. Their actual earnings report was good. They beat on revenue, beat on EPS, and they beat on EBITDA, but it was the 10Q filing. It was disclosed this morning and it wasn't on earnings, about this like circular thing that's happening. Hey, shout out Isaiah and Hill. Good to see you. I hope you're having a great day. Thanks for thanks for the gifts there. And we'll look at the Uber dip too. Absolutely. But yeah, check this out. NVIDIA, they have this automotive software, which sadly didn't grow really year over year. Well, it did a little, but they have this automotive software that's cool. But yeah, they have a PC or GPU market share of 24% and insane demand from data centers wanting to buy their GPUs. Their margins are insane. But one thing NVIDIA is doing is they're lending out revenue to like Anthropic and like CoreWeave. And the circular thing is happening. They're lending out money to these AI startups and these, not startups, but they're taking, NVIDIA's taking stakes in them and giving them money. But with that money that they give them, almost 80% to 100% of it just comes right back to NVIDIA via chip orders. So it's a bit circular right now, but this number was phenomenal. They made 32 bill of net income, after they paid their 4 billion in taxes. Like it grew 65%, up from 108%, up from 1000%. These numbers are great. I mean, what's the forward PE on NVIDIA now? I am curious. 29 or that actually, I don't know if that's real. That might be too bullish EPS projections, but I guess a 150 annualized, the EPS growth rate has just been so quick. It was just at like 30 to 60 cents a quarter. Now it's going to be easily over $1 a quarter. And so NVIDIA is so cool. Law of large numbers does kind of hurt them though. $4.5 trillion company. If you buy a share now for you to double your money, they have to be worth like basically 9 trill. That's why I actually bought AMD, and it hasn't done as good as NVIDIA, but it's still done pretty good. We're up 70% on our shares. Obviously, they're tanking. They're down 5% on the day from the NVIDIA shenanigans. So yeah, a lot of our stocks are. Check this out. Here's our whole portfolio. I love being fully transparent. Look at this. We're only up 7.7% all time. Definitely underperformed. I'm not an expert. Don't listen to me. And we're down 2.3% of the day. But yeah, Robinhood's down 8%. Yeah. Yikes. How is our portfolio? We're down 0.5 right now. All right. So wait, what was the stock I wanted to look at? Hey, yeah, let's go look at Uber real quick. I think if you're looking for a stock to buy the dip on that's just quality and it's worth buying even right now, I think Uber is the one. The forward PE is a 24. It says the right now PE ratio is a 10. This has a one-time adjustment. It's not actually a 10, but the real PE ratio is around a 25. For Uber, that's such a steal. Every time someone books an Uber Eats or a ride, they just collect a royalty every time. You see their monthly active consumers went from 161 to 189 mil. So their active consumers are growing. That's the metric you really want to look at. Like the Uber Eats business grew 29%, after grew 18, after grew 7. So the growth rate's growing. They're taking stakes into genius companies like Grab Holdings, give them international diversification. And check this out. Uber, if we go to their net income, this is why that's why the PE ratio is so artificially low. They didn't actually make 6 billion of net income this quarter, but they actually made $1 billion. Like they print money. They're so profitable. Like I really do like Uber. So yeah, definitely worth nibbling. And certainly if you don't want to buy them yet, put them on the watch list. Like we know that the Uber commodity ride sharing works. And Uber also owns a big stake in Grab. But yeah, anyway. Uber can't stay above 100. Yeah. I missed the news on a video this morning. Yeah. Hey, what up, Hill? So let's see here. Should we do Meta? Yeah, we haven't done Meta today. So Meta, this is like one of the cheapest. I think no, it's the cheapest Mag 7 right now, and I own them. I'm never going to sell them. Again, if you're like me and you have the intention to just never sell this high quality asset as Meta, it's worth buying right now. So they just had to pay some like little fine or little slap on the wrist fine by the Spanish, or what did that say right there? Meta Platforms slightly 550 million Spanish legal penalty. I don't know, whatever. So here's Meta right here. The forward PE is a 20. I mean, it can't get cheaper than that. I mean, I really can't see Meta trading at a high teen multiple. Well, actually, I was buying them one time there, but 26 PE on Meta is so fair. If we go to their active users right here, Meta literally has 3.55 billion daily active users. So pretty much half the world is on one of their apps a day. And again, if we go to their net income, they had a one-time adjustment this quarter. That's why the EPS got hit and why the stock initially fell. The net income was only 2.7 billion, but that includes a $15 billion one-time tax charge. It was complete one-off. So if we go to operating profit, which doesn't include that little one-time expense, this was an actual record quarter for them. 20 billion net income. The total sales were 51 billion, first ever quarter with 50 billion revenue, but investors are questioning how much Meta is spending on AI because they're legit spending 20 billion plus of net income every quarter on AI and stuff. And you know what? Someone said that it's really interesting. Apple is being rewarded, and Apple's almost like a hedge because they're not spending anything on AI. And I guess as LLMs get commoditized and get cheaper, the real winner in the long run will be Apple, who's not spending anything on AI right now. So kind of interesting on Apple. But yeah, Meta is a great never sell stock. I do own them. I'm totally biased. They're introducing ads to WhatsApp. You know, after they acquired WhatsApp and their original founder was no ads, no games, no gimmicks ever, they're introducing ads to WhatsApp, which honestly, as a shareholder, I don't mind. And it's not on the main part of it. They also own the Meta Ray-Ban glasses, which I think are pretty cool. You can like scroll through reels and stuff. Hey, what up, Trevor? Good to see you, homie. He has a great Discord. What app is this? Yeah, hey, these are all brokerages. This is Robinhood, Moomoo, Webull. They're all in the link tree in my bio. Not sure which one you're talking about there, but yeah, all these brokerages are all in the link tree in my bio. This one's my favorite one right here. Very first link in the link tree in my bio. Okay. Let's see. Rate cut delay. Yeah, we did. Real quick, I'll show you the interest rate cut probabilities for next. Oops. The interest rate cut probability for the December 10th meeting. Check this out right here. There's now a higher chance of a no rate cut, 60% chance of no cuts. And just couple days ago, it was like 60% chance plus of a cut. So looks like the odds are shifting a little bit. What's your top holding? Yeah, hey, this is my largest holding right here. I got multiple portfolios right there. So, yeah, our Webull portfolio is getting whacked today. AMD's down, Futu, Robinhood's down 7. But yeah, good day to buy the dip, and I think nibble on some shares. I'd certainly create a watch list of stocks you want to buy. I think Uber is a steal here. Vita Coco is another interesting one that just deserves all this hype around this name. Number one, I hate the drink industry, so competitive, but they're number one market share for coconut water. They have legit 45% market share for coconut water via Vita Coco brand. They have no debt whatsoever, completely debt-free company, and their Vita Coco water just hit a record up 41%. That's pretty crazy growth. I think they just got into Costco. But yeah, they make net income every quarter, no debt at all. They're certainly interesting. What's the forward PE on Vita Coco? 35 might be fair for them. But yeah, I love ARM as well. ARM is really a royalty license play. Legit like 100. Oh, that's Axon. ARM legit royalty company. If we go to their gross margins, 98% gross margin. I mean, just insane. I think it used to break it down. Or if we go back here, yeah, look at this. 70% of the revenue is their royalty revenue, super high margin, of course, and then their licensing and other revenue, just insane. So yeah, I do love ARM, and this is a tech stock I'd love to buy on the dip, but the valuation's still too nutty. 122 times next year's net income. Yeah, a lot of stocks are drowning today. It's the Verizon Dividend Safe. We'll check them out too. Yeah, look at this right here. I guess some of these aren't too popular. Like Micron's down 8, Hood 8, Datadog, Beyond Meat. I forgot about them. Yeah, Pan W. This is a stock I'm looking to buy the dip on. They had they lowered their guidance or something. It's still expensive. My favorite cybersecurity stock of all time. I'd love to get into PanW. You know what? Let me go over PanW real quickly. I put them on the watch list, but I would not really buy the dip on them yet because the valuation is still really expensive. But check this out. This is really a subscription model company. Over 50% of the S&P 500, well above that, use their software. And before today, this has like been immune to AI because as AI gets better, hackers will get better and hackers will utilize AI. I really like cyber, like when you look at this other software names like Adobe, Salesforce, they're getting crushed, but not PanW, not these cybersecurity names as much. CrowdStrike's another great example, but yeah, their subscription revenue just hits a new record every year, every quarter. They make good net income. They make a couple $100 million of net income every quarter. CrowdStrike's still seeing those lawsuit payouts, so they're not making any money, but Cloudflare's still losing money. But PanW, super quality name. All right. Bull earnings tonight. Let's go. I can't wait for that. Let's look at Verizon real quick. Is the yield safe? Here's how you can tell if a dividend is safe. And first off, if you're like 10 years away from retirement or more, like this isn't really a stock you want to own. Verizon is the same price that it was back in 1997. But what you do get every year is the dividend. So they have a 6.6% dividend. Let's go see if it's safe. And here's how we do that. You go to the net income right here, or we could look at the cash from operations, which includes because they have a lot of debt. The cash from operations includes the negative debt interest payments, but the net income is really what you want to look at. But they make $5 billion of after-tax net income a quarter. Pretty much, we'll just say $5 billion every quarter. Let's go see how much the dividend costs. And the dividend cost exactly $2.89 billion a quarter. So they absolutely have a safe dividend. But I don't see this stock really outperforming the S&P 500 in the long run. They do have 130 bill of debt to pay, but I wonder how much their interest cost. Or let's go see how much interest expense they have a quarter. So they're paying $1.6 billion in interest, negative interest a quarter from the debt. But I think in an inflationary environment, having debt helps. Or okay, you buying in these dips or stocks on sale? Yes, sir. I think Meta's a great buy here. I've been buying the dip on Webull, Iron Mountain, in my Roth IRA a little bit, but yeah, haven't bought too much. I feel like I should have bought more today, but I really haven't. Yeah, here's our Webull portfolio. It's tanking today, so yeah. Okay. Hey, what up, Shark Water? Let's check this one out. Zeta. Yeah, here we'll do Zeta stock. I know this one's kind of popular here. It's some like enterprise software company. And I like their numbers. The stock has been flat for a while, but their actual numbers are good. I wonder if Morningstar has any research on them. I don't know if they have like a moat or like some software that is like a competitor to another one. Or I just don't know too much about them. But check this out. They're beating on expectations every quarter. They beat on revenue. They did slightly miss on EPS, but they did beat on EBITDA this quarter. But yeah, actually, I don't care that they missed on EPS. This was still a great narrowance of the net income. They only lost $4 million of net income. That's phenomenal. At this rate, they used to lose, $40 million a quarter. At this rate, they're going to be net income positive every quarter in a year. And the revenue growth is good. If we go to the revenue, it's up 25. After grew 42, after grew 25. So I like it. Your cash from operations looks good. So yeah, Zeta's an interesting one. Software name. Which apps are you using? Yeah, hey, by the way, all these brokerages or all these apps are all in the link tree in my bio. They're all affiliate links too, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. Yeah, I love all these brokerages. They're all free, cost nothing. But out of all of them, this one is my favorite. Very first link in the link tree in my bio. We're doing all my analysis on this app right here because it has the best analysis tool. So, you can buy a stock on any app. This one, literally free, cost nothing, no commissions, lowest fee. Amazing. So there we go. Let's see. Root stock. Hey, I think that's an insurance, like a direct to consumer insurance company. They were literally going to go bankrupt, but then they got some crazy, I think they acquired a company or something. I don't know. But if we go to the revenue right here, we could see kind of trending down to zero, but then something happened and the revenue just spiked up and the growth is finally back on this company, which is the good news. The revenue's up 26%. After grew 165%. So they're on a nice streak of growth. And is that real? Looks like they might have lost net income this quarter, but they're usually making, 10, 20 million net income a quarter. But this quarter they did lose. I don't know. small insurance name. I wish I'd give you more thoughts on them. They're kind of like a Lemonade, an LMND. I wonder what their short interest rate is. I know Lemonade has a bit of a what is Lemonade's? Oh wow, the short interest just went down. It was 24, now it's 20. Well, still very high. But yeah. What's your overall profit and loss? Hey, that's confidential. Just kidding. No, depends on the portfolio. Like, I love being fully transparent. Check this out. Look, our all-time profit and loss, we're up 171% all-time in this portfolio versus if we just it does the math for you every time I invest money. If we just put it in the S&P 500, I'd be up 56%. So that's still great returns, but we're doing better. We're up 80% year to date. We were doing just as bad earlier this year. We were down 15, but now we're up 80%. Why are we up so much? Because we didn't sell before today and we bought the dip earlier. Most of those gains came from cover systems. We bought the dip in April, and we just been holding on strong ever since. And not just them as well. We bought the dip on Amphenol stock. They've doubled since when we bought them in April. Coca-Cola consolidated, dollar cost averaging on that one. If you go back, you can go back to my YouTube channel for years. Like, we've just owned all these same stocks. It's not like I've sold out of a bunch of names, but yeah, Powell Industries as well. We're up 3x on them. They're actually pretty green on the day. Not too shabby. Okay. Can you do Core Medics or can you do Monday? Oh, actually, Home Depot, or let's do Home Depot. Then we'll get to Monday.com. That's an interesting one. Oh yeah, but speaking of all-time profit and loss, yeah, check out this portfolio though. This is why you don't listen to me. Our opening profit and loss in this account, we're only up 7% all-time in here. We're down 3% of the day. So yeah, we have some losers that we've sold off in here as well. Like, we're down bad on UiPath, Zoom. I think those are too cheap to sell, but we lost like $2,000 on ChargePoint, years ago. But yeah, and we've done some stupid stuff. Like, we trimmed like. Some of your biggest regrets won't actually be companies you lost money on. It'll be selling out of high quality names that just go higher. Like Robinhood, I sold 50 shares of them for a 3x gain at $36. But now they're over $100. Same with SoFi. I regret every share I've ever sold a lot of those companies. So anyway, let's get to Home Depot right here. This is one of my favorite dividend growth names out there. So check this out. If you go to the dividend, you get a 2.75% dividend. They raise the dividend every single year. I actually was listening to the earnings report that the Home Depot CFO said that the reason there was a bit of a slowdown was lack of storms was literally his reason. I didn't believe, but it kind of made sense because a year ago around that, there was a bunch of hurricanes. Like, there was a terrible one that hit North Carolina, and there was a few that hit Florida where like Disney World had to close for a few days. But we haven't had really any hurricanes recently. So I guess that is maybe one reason them are slowing down. But also, weird thing, I was listening to Six Flags earnings report. Six Flags says, oh yeah, people aren't coming as much because there were too many storms. So it's kind of like a dilemma here. What is it? But yeah, Six Flags is probably just saying anything they can. But anyway, if we go to Home Depot right here, they are an interest rate sensitive kind of name. So the revenue growth has slowed, single digit, but they still print net income. Check this out. They make easily $3 to $4 billion of after-tax net income a quarter. And how much does the dividend cost? Let's go see. They're doing $3 to $4 billion, and the dividend only costs 2.29. So yeah, that's right around that 60% payout ratio. 3% yield, then you kind of just hope for 3 to 4% stock price appreciation every year. So yeah, as we go into a low rate environment, they should benefit too. Another stock that almost rhymes very similarly to them, they actually have, with their Henry brand, one of the best, I think, literally best-selling products, they've won that award. It's probably not true, but one of the best-selling products in Home Depot, these Carlisle products, they acquired Henry. But yeah, we can see they kind of, anyway. I just bought more. Don't be scared. It's some people don't like doing it psychologically, but we just bought a fractional. I bought 0.1 share of Carlisle Group just because I didn't have enough for a full share. So I'm like, let me just buy 0.1 shares. Oh yeah, look at our dividends too. We get dividends from this company. I think we have a pending dividend. Yeah, look at that. We're about to get on December 1st, a $14 dividend. Hey, not too shabby. By the way, this is our dividend-only portfolio where every stock in here pays a dividend, but notice most of these are like dividend growth companies, like Meta, for example. We don't get many, $2 dividend, $2. Look, we bought a share at $6.44 and it's $5.89 or $5.86 today. So we bought a share at $6.44 and it's $5.80 today. But we've been in Meta for a very long time. We were buying shares at $4.40, and we've actually, how long have we owned them? We can just tell by dividends. Yeah, so we've owned Meta for a year and a half now. Anywho, Meta's, I think, the cheapest Mag 7. I'd buy them now. We're super not financial advice, but they're really good. Let's do Monday.com. Oh, hey, try not to spam and chat there. NVIDIA, what do you mean there? NVIDIA where? Or I'm not sure what you mean there, but what's up? What up, market Market Miker, what up, dude? Thoughts on Toro? Yeah, that's like some Israel brokerage. We'll check that stock out after this. I don't love the fact that like none of the revenue comes from the US but anyway, here's Monday.com. This is like a software company worth 7.5 billion. I think I was reading something about this. They're getting hurt, of course, by the AI thesis. Let's actually see what AI has to say about the earnings report, because I don't know much about this company, to be honest with you. Enterprise customer adoption and new product launches, including Monday CRM and campaigns, drove significant revenue growth, over 10% of total annual recurring revenue. Customer base expanded was notable, with 48% increase in customers generating over 100K for them. Wow. And sustained strong net dollar retention. So looks like they have a lot of customers paying 100 grand plus a year. So look at that. That's weird. So they beat on revenue, they beat on EPS, and they beat on EBITDA. So triple beat quarter, but maybe the valuation is just too high here. Yeah. Oh, so the forward PE, it's the valuation. They are trading at 116 times next year's net income. That still might be too high of a multiple, and this might be like a reasonable range, and they might actually go a little bit farther down. 106 times next year's net income, but that's because they're just now getting net income positive. But anyway, some sort of software company. I don't know. What are monthly paying dividend stocks, or what are there's not many good ones out there that like. The best one I found, I think the very best one is Main Street Capital, MAIN. It's actually it's either going to be a BDC or a REIT, because those are the companies that have to, by law, pay out 90% of their taxable income in the form of a dividend. No other companies pay out monthly dividends like that unless it's like a covered call ETF. But yeah, Main Street Capital, this one's an individual BDC. They actually make so much money. They pay you 26 cents a month. But they've been making so much money recently to get to that 90% pay ratio rule. They've been doing quarterly or frequent special dividends. So the yield's actually a little higher than normal. But yeah, if we go to this company's net income, look at this. So they're making easily 100 plus million in net income a quarter, like 120 million of net income a quarter. The dividend cost 85 million a quarter. So again, that's a high payout ratio because it has to be, but it's actually more sustainable than I think. There's a lot of junk BDCs. There's a lot of junk REITs, like a random like LTC. Oh, that's not Litecoin. LTC Properties. Like this is a popular monthly paying REIT, but actually Realty Income as well hasn't done good. Or like if we look at them, they're significantly lower than they were in 2019. Actually, Realty Income is the same price that it was back in 2016. And so actually, Main Street Capital is one that has a high yield and it had some pretty good stock price appreciation. Okay, let's look at Toro real quick. This is like some wait. Hey, wait. Let me know. Is it ticker symbol Toro? Might be thinking of the wrong stock. There's TTC, the Toro. And then there's ticker symbol Toro. You're probably just talking about this one right here. Let's see. They're headquartered in Cyprus, and they're an oil and gas or liquefied petroleum company. It's a marine shipping. Oh, so it's this one. Okay, I think this is the one you're talking about. Nice. Okay, we found it. Let's go check it out. So they're headquartered in Cyprus, so they probably don't pay taxes. We'll actually go check if they pay taxes. There's some other ones like GSL, ticker symbol GSL is another very popular one. They're headquartered in the Marshall Islands and pay no taxes. So looks like, yes, some sort of oil tanker shipping company. Let's go check out their net income because that's what matters. And again, this is in USD. The revenue, the sales, the lifeblood of the company, the revenue's down 25%. That's just mostly from just the price of oil being down, but the revenue's down 25, but they still made, wait a minute, 2025. Yeah, says they're making that's $1 million. Wait, only $1 million? Wait, is that right? Oh, wait, I'm just so slow here. The total sales are 4 million. So this is a way smaller company than I thought. I wasn't even realizing it. The sales are 4 million of revenue a quarter. But they actually made $1 million of net income, but they didn't actually. Here's the funny part. You go to operating profit, the core business actually lost money. So the revenue's 4 million, the core business lost money on that, but then how is the net income positive? It's explained by this balance sheet right here. I bet you we'll go check. They have so much cash on hand, 100 mil plus of cash, it's earning interest. Let's see, they should make around 2 mil of interest a quarter if my math is correct. 2.5 mil. Or wait, no. 1.18 mil or usually 1 to 2 mil of interest. Anyway, such a small company. I wish I give you more thoughts on them. But yeah, that balance sheet looks good. Yeah, let's look at Bull real quick. They have earnings today, and here's my bull case for ticker symbol Bull. Um, I bought like 20 shares of them yesterday. Again, they report earnings in literally 3 hours. So if you buy the stock now, it's pretty much a bet into earnings, and that's really risky. So I wouldn't really recommend that. But honestly, honestly, it might be worth betting on earnings as a super, 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 super small position. I kid you not. Like, I'm more bullish on Webull than you. Well, please don't have it as a major size position. Like, buy maybe one share, but like for fun, buy one share or something for. I actually can't be saying this stuff, but anyway, Webull certainly looks interesting. Here's my bull case for Bull, and I own all these brokerages. I own Robinhood stock, I own Webull stock, I own Moomoo stock, I own all the brokerages stocks. But here's why I just recently bought a bunch of Webull stock. I didn't own them before today. Webull is this brokerage right here, this app I'm on right now, and this app actually just introduced the prediction market, and and they just bought crypto back to the platform. So you can now buy crypto and you can do the prediction market stuff on here. And they have this advisor stuff, and you can do options, bonds, money markets, all that. And they just introduced all these new features, and that's what has made Robinhood specifically a boatload of money. Robinhood just introduced, where is it? The prediction market stuff. And the day this Robinhood CEO tweeted they did over 6 billion in contracts, the stock went up 10%. And that's what's making them a bunch of net income, because brokerages don't make too much money when you buy and sell stock. But whenever you do the prediction market stuff and the crypto stuff, that's where they make the juice of a margin. And they literally just added this prediction market stuff, and they just added crypto. I think it's a bigger deal than the analysts start giving it. So that's, at least I have a reason for it. But yeah, the revenue's already been pretty decent. The revenue was up before today, it was up 46%. I think the growth is just going to continue. They're still struggling with net income positivity, but I think it's going to add their gross margins, net margins. I think the net income is just going to go up with this new prediction market stuff. Like, it's literally, they just collect a little royalty. So there's my little bull case for Bull. Yeah, yikes. Market looks like it's dumping again. We had a little bounce, but the bounce was not sustained. Is anything up on the day? Jack in the Box. That's after they're at an all-time low. Look at that. They hit an all-time low yesterday. So that's a little sympathy rally. Poor Jack in the Box. All-time low on their stock, pretty much. Powell Industries is up on the day. Okay. Let's look at some more of y'all stocks. Who owns? Oh yeah, Moomoo stock. That's actually ticker symbol FUTU. I'm more bullish on Futu than I am on Robinhood and Webull. This is my favorite brokerage stock of all time, with the cheapest valuation, that does yearly special dividends, that is so great. I love Futu stock, another great one. I'm actually can't promise this, but as soon as this stream ends, I might look into trimming or depositing money and buying just more of this stock. Like, all the stocks on the dip I want to buy, Futu honestly is. Let's go over them. So if you're wondering what is Futu, that's this brokerage right here. This app I'm on right now, publicly traded, and I'll just show you their numbers really quickly. I keep my. Even if this company were to go bankrupt, you're still FDIC insured for $250K. But it's good to know that this brokerage actually prints money, is not going to go bankrupt. They literally made let me convert this. In USD, they made $400 million of after-tax net income this quarter. The revenue was up 86. So the revenue's up 86 and the net income's up 150. That means they're expanding margins. They literally had a 50% net margin. So yeah. Oh yeah, they introduced crypto. That led to triple-digit growth these past 4 quarters. You can buy crypto on this platform. They make a lot in interest income. So actually, that's their largest business now. Look at the interest income. It rocketed up 80% year over year. If you're wondering what is this interest income, so brokerages, if you look in the very, very middle of my screen right now, they just give this for free. Your idle cash earns you a 3.6% APY, and it pays you out weekly. But they earn a little APY on top of that, and then they pocket the difference. But it doesn't bother me. What's crazy is this app gives you a 3.6% APY for free, cost nothing. But if you want to get that on Robinhood, you have to pay Robinhood $5 a month, and they give you a 3.5% APY. You have to pay $5 a month for that. This app is completely free, cost nothing, no commission. That's why I love this one. Anyway, if you want to get this brokerage, I'm on Futu, Moomoo, Linktree in my bio, very first link there. Robinhood, all of them are all linked up there too. Okay, I honestly think it's worth looking into right now on the dip. Yeah. Okay. Yeah, Futu. Yeah, hey Clint. Yeah, again, Futu is this app I'm on literally right now, publicly traded. So yeah, if you want to get this, this brokerage I'm on publicly traded, which is pretty cool. So yeah, they're worth $21 billion, but the PE ratio is so cheap, 17 PE. And I'm a user here. But yeah, they make a bunch of interest income and brokerage commissions. That's up 90% year over year from the crypto stuff. Like I love this company, 50% net margins. And another cool thing is, if you like dividends too, they don't pay a dividend like a real one, but they do every single December. They're about to release this do it every December, a special dividend around Christmas time to kind of reward you as a shareholder. So they're about to release a new special dividend. I think it's going to be a record one because the net income used to always be like 140, 150 mil a quarter. But look at the spike up recently. What happened for them to rise up so much? I think it's the crypto and stuff. And that's what Weeble's doing now. So anyway, pretty cool, I think. Yeah, this app and this brokerage has so many cool features. Yeah, 24-hour market, fractional shares. And brokerages make a lot of money when you do margin. I never recommend ever you really take out debt to buy stocks. So, okay, let's look at some more of y'all stocks here. What up? Kua said ICO stock. Hey, thanks for that gift there. I appreciate that. He said ICO. Let me know if you're talking about this Hong Kong stock, or I can't find that stock. I'm looking for it. I apologize there. Couldn't find it. Let's see. Thoughts on Big Bear AI? Yeah, I don't think I have any real thoughts on this one. $2.5 billion company. What is this up here? BBI announced a strategic partnership with Easy Lease. Okay. I know I think one of their government contracts are slowing down. Like, look at the very number one line here. Revenue decreased due to lower U.S. Army program volumes and government contract disruptions. Okay. Let's go look at their numbers because that's kind of what matters here. So revenue that's actually not good. So it looks like the revenue is down 20% year over year. So the sales are down 20, but is that real? Okay, no, they're losing 20 mil a quarter. So the balance sheet just got better, but I'm guessing, so they diluted you by 350 million this quarter and 300 mil last quarter to really fortify the balance sheet. Because the balance sheet used to be junk. They had more liabilities than assets, but they literally had to emergency dilute you because, wow, I forgot. Yeah, they lost 200 mil of net income that quarter. When you lose 200 mil, that got to come from somewhere. And I would not have that stock as like a big size position, to be honest with you. I don't know. Okay. Oh yeah. Wait, I see Icon OVO. Yeah, unfortunately, I just don't think this is a stock I can view on this platform. And I can view literally every exchange. It must be on some weird OTC exchange for me not to be able to view that stock. So I apologize. If you got another stock you want to look at, let me know there. But yeah, I can view Canadian stocks, Chinese stocks, Japanese stocks, Australian. I don't know where they're listed. But anyway, here's SCHD. This is an ETF you really buy as a dividend play. And it's two things in one. I think it's a nice way to diversify away from the tech-heavy S&P 500. Again, because it's not tech-heavy, it's underperformed, same price that it was in 2021, basically. But what you do get also is a 3.88% dividend. So basically 1% of your money back every quarter. And this is an ETF. It owns a basket of stocks, and here are all the stocks that it owns. And I like most of these, Buffett-type stocks like AbbVie, Coca-Cola, Pepsi, Chevron, Verizon. Yeah. All kind of like boring. Yeah. The 4% yielding stocks. Yeah. Actually, we can see the Warren Buffett portfolio. He just went shopping again. He bought Google. That's actually why Google was doing amazing. For the first time ever, Berkshire Hathaway and Warren Buffett actually bought Google. Sold a little bit of Apple to do it. But yeah, they owns a lot. The Coca-Cola, Chevron, those are his holdings too. Yeah. Hey, no problem there. Yeah. If you got another one you want me to look at, let me know there, Q. My bad there. So let's see here. IBIT ETF. Yeah, hey, this is literally just Bitcoin, but in an ETF. And honestly, I've been hearing like certain like popular exchanges and like people, like certain ledgers having malware on it and getting your crypto hacked. Honestly, the safest way might be to just buy the IBIT ETF because it's SIPC insured for $250K, even if BlackRock messes it up. It's run by BlackRock. This is my best basically ETF way to get it. It's literally just ETF Bitcoin. There you go. It does exactly what Bitcoin does, just on an ETF, and you get that SIPC insurance. Why did NVIDIA rise and fall so quickly? Their earnings were good. Yeah, so actually super quickly, NVIDIA announced earnings, and the earnings are really good. But in that announcement, they didn't released their 10Q, and they released their 10Q right at the open this morning. So, and then the 10Q, there was some bad circular kind of news. And I don't remember it exactly because I was wanting to. I've been live for a long time now, but yeah, OpenAI or Nvidia is giving a bunch of money to like Anthropic and a lot of startups, and there's like a bit of a bubble going on. It is a circular thing where Nvidia is giving a bunch of money to startups or not even startups, just companies, and taking stakes into those companies. And then in turn, those companies are just spending legit 80% to 100% of that money back on NVIDIA chips. So they're giving out money just for that money to go back to them in like a circular kind of way. Here's kind of another example of that. Like if you didn't know, NVIDIA owns 100 billion of OpenAI. OpenAI owns 10% of AMD. So whenever AMD stock goes up, it indirectly makes NVIDIA stock go up. And the chip orders between CoreWeave and stuff, where NVIDIA is guaranteeing the buybacks of the unused capacity. Honestly, NVIDIA is worth looking into, though. Great numbers. I'm talking phenomenal numbers, but they're down 2.7% of the day. Every metric beat. I could not believe the net income. I mean, 33 or 32 bill of net income, after they paid their like 5 bill of taxes, like that was real insane. Like if another company can pull this off, they deserve it. So, so yeah. Yeah, a bit of a AI bubble. Billy said, what app are you using? Yeah, hey, by the way, if you want to get this brokerage I'm on, it's actually in the link tree in my bio, the very first link there. If you're on the YouTube stream, it's actually in the link in the description. So yeah, it's a broker called Moomoo. They ask her a bunch of information and stuff. Yeah. Hey, what up, Jay? Good to see you, homie. Good to see you again. Someone said, Sand said GLDM. So yeah, this is, in my opinion, the best way to get exposure to gold. So everyone knows about the GLD ETF. If we go to versus overlay and we compare the GLD ETF, and what is GLD? It's literally just a commodity of gold in an ETF form. This is the exact same ETF run by the exact same people, just with the lower expense ratio. So yeah, it's XAU to USD, which is just gold. So yeah, if we go to their expense ratio, they only have a 0.1% expense ratio fee. But if you buy ticker symbol GLD, it has a 0.4% expense ratio. So you're saving $30 a year for every $1,000 you put in by buying GLDM over GLD. So if you ever, and same for IAU. I think there's IAU and IAUM as well. IAUM, I think is slightly higher. What's theirs at? IAUM, another great one. Oh, actually, whoa, hold on now. This one actually, I think is the better one. 0.09% expense ratio on IAUM, which is the exact same thing. Anyway, IAUM, GLDM, both are pretty much the same. Only a 0.01% difference. So yeah. Okay. Yeah, hey, what up, Billy? No problem there. Let's see. My beautiful SoFi is tanking. Yikes. BLZE. What is this one? Oh, I think this is some cloud player. Is there any news on this one? Or what was the short interest rates? So actually that's low. Only 2.5% of all the shares are being shorted. But check this out right here. They have this Backblaze cloud storage. And look at the growth. This is what I actually love about this stock. This is great. Revenue's up 28, after grew 39, after grew 41. So the growth rate is good. What about this business? Their computer backup. Looks like the growth is slowed, but still green, 0.3% year over year. They beat on revenue, they beat on EPS, and they beat on EBITDA. It was a triple beat quarter. They're narrowing their losses. I wonder why the stock is just tanking, though. I don't know if they have like a real moat or something, or it's the market cap. Oh, yeah, they're only worth $250 million. Like at the end of the day, it might just be like a big facility with a bunch of GPUs in it. I don't know if they have any like real IP or I just don't know much about them, but I like the revenue growth there. Check Apple. Yeah, dude, Apple is like being rewarded for not, Apple's gonna be like this is a great never sell stock. You just buy and never sell them, but they're being rewarded for not spending so much on AI. And they're not spending anything. As LLMs get more commoditized, Apple in a year will just and as the price and the just going to become so cheap, Apple can just implement the best one without having to spend this 20 bill and 30 bill a quarter that Meta, Google, and Amazon are doing. They're spending legit 20 to 30 bill a quarter on AI right now. But and same with like Oracle, a bunch of companies, but Apple isn't. They're just spending not a dime on AI, which is kind of smart for them. But yeah, they're sticking to what they know. Check this out. So here's their smartphone market share. They have a 17% smartphone market share. They also make their own smartphone chips now. So they have a smartphone market chip share of 14%, which is kind of cool. But yeah, their number one selling product, of course, is the iPhone. I'm on an iPhone right now. But yeah, the sales have kind of been flat for a couple years, like 4%, 0.3, -2. So sales have been flat for a while, but this is the best part about Apple is actually their services business, which is at a record right now. So whenever you go spend money on the App Store, if you go spend $100 on the App Store on like Clash of Clans gems or whatever, spend $100, $30 of that goes back to Apple as literally a royalty. So they collect these royalty service developer fee, they call them, but that revenue just hits a new record every year. Then they have the wearables, like the AirPods and stuff, the Mac revenue, the iPad. Here's why also they were really affected by tariffs when they were initially announced, because did you know only 36% of Apple's revenue comes from the US? I always thought it was more than that, only 36%. Then 26% is EU. China is 15%. We don't allow China phones in the US because it's all spyware. But in China, they allow Apple phones because Apple's phones are so protected and the data's so secure that there's no back door. Apple can't even have access to it. That China allows Apple phones and stuff like. Anywho, Apple's a great never sell stock. I don't know about right now's valuation though, but yeah. Moomoo's very underappreciated. Need to pause this some more. Hey, yo, nice, Jay. So let's see. Bitcoin. Yeah, hey, I wish I could we'll look at it because that's all we can do. But I clicked on the crypto ETF. What? Okay, Bitcoin right here. Oh yeah, we were talking about Bitcoin. Kind of is like a triple beta QQQ. It's been triple. It kind of rhymes with that. So look, this is the triple Nasdaq TQQQ versus Bitcoin. But anyway, Bitcoin. What's a unique feature about them is they don't report earnings. Like they can't miss on their net income and miss on their net margin. So it's kind of like a catalyst-free kind of interesting asset. I do think it's a bit propped up on Michael Saylor though, and I don't own any crypto or Bitcoin. I'd rather buy stocks that pay dividends, but there's been times where I regret not owning Bitcoin because it does great in a bull market. But actually, I own a bunch of the Bitcoin beneficiaries. Think Webull stock, Robinhood stock, which makes a bunch of money from crypto transactions. So I kind of own Bitcoin adjacent stuff. Okay. Oh, and SoFi too. Swindle said Grab stock. Yo, I love Grab right here. Hey, thanks, Raphael. I appreciate that. Yo, if you guys want to hit the follow button, we actually stream every day. I sell nothing. I literally have no course, book, WhatsApp. I'll never follow you, DM you, nothing like that. Literally sell nothing. The only thing I do have is a YouTube channel. So if you want to support me, the best way is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. Yeah, I'm streaming on YouTube and TikTok right now. Best way to support me is just watch a stream from YouTube. But anyway, let's look at Grab Holdings right here. This is literally international Uber. And I love everything about this name. So check this out. They do exactly what Uber does, but notice the US and Canada isn't on here. Look at where all the revenue comes from. Malaysia, Indonesia, Singapore, Philippines. So we know the commodity of ride sharing and getting your food delivered to you, whatever works. It's Grab. I've seen about like YouTube videos about this, like not even like investor videos, just watching YouTube videos. They're like, oh, dude, you got to book a Grab. Like you don't want to just, when you're in these other countries, you don't want to book some local, like the local van or something. They always rip you off, but you always book a Grab, they say. So it's like international Uber, but check this out. Uber is the largest shareholder. Uber owns 13% of all the shares. So they're like backed by Uber. And it was also genius of Uber to buy shares because that gives Uber instant international diversification. Also, Toyota Motor owns 5.5% of all the shares. They have no net debt. They make net income every quarter. They're really growthy too. Like sales are up 21% to 870 mil. Analysts are expecting it to, what's it in 2 quarters? 922 mil. It's almost going to be $1 billion of revenue a quarter. So anyway, dang, the EBITDA is supposed to be 100 mil on that. Wow. Okay. I'd grab them or I'd nibble on them right here. Another stock, I'd buy Uber too. The two stocks are going to look very similar. Ooh, whoa. Uber's down 7. No, why are they here? Oh, it's because of Waymo, I think. So actually, Waymo and Zoox actually. So one, and this only hurts the US market really, but Waymo, which is kind of a competitor to, I guess, Uber, that's owned by Google, those Waymo autonomous driving cars, and Zoox, which is Amazon, also has a thing that competes with Uber. Anyway, it might be, there was specific news around Google expanding the amount of cities of Waymo today. So, all right. So let's see here. Are you keeping track of interest rates? Yeah. The interest rate cut probability, super quickly for that person that commented, the interest rate cut probability, this has changed drastically from last week. For the December 10th meeting, there's now a higher chance of no cuts, 60% chance of no interest rate cuts on the December 10th meeting, which isn't that crazy far away. Okay. I'm a fan of Grab as well. I want it under 5. Yeah, you analyze markets with the clear. Hey, thanks. Yeah, I try to be unbiased and just and if there's a stock I don't like, I'll tell you I don't like it. Like someone said, Lucid. Yeah, this is why I always look at financials. Financials always explain why a stock is doing what it's doing, or at least in the long term, because there can be some short term momentum, but they will. If a stock is having short term momentum and rallies up a bunch, if there's not real good financials to justify it, it'll all get sold off, just like I've seen a million times on every company ever. That's why we focus on financials so much. So if you look at Lucid right here, just kind of think about this logically. The whole company is worth $3.8 billion. They're at an all-time low today, but kind of think about that in the back of your head. You could buy the whole company of Lucid for $3.8 billion. So let's say you pay it. You pay $3.8 billion. Well, you just bought a business that lost $1 billion in net income in the past 3 months, then 500 mil, then 400 mil, 400 mil, $1 billion, just for all of eternity. This is just not a good business model, but because it just burns through net income. So that's why they're at all-time lows, and that explains why Palantir's and Apple is at all-time highs, I think. So what app to use? Yeah. Hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. Broker called Moomoo. APH stock. Yeah, that's actually one of my main holdings in here. Been one of my best performers, actually. I actually bought another share of them at 135, and it's at 132 now, so we're a little down on our position. But the forward PE is a 32. That's insane. The right now PE is expensive. Like, it's tough. I would not buy this stock right now, although I did just buy a share higher than what it is right now. I would so smallly nibble on this stock, but this is one of the best, like, NVIDIA beneficiaries, like AI beneficiaries. So they're the number one company supplying NVIDIA their copper cables. If we go to their communication solutions right here, it jumped up to 3.3 bill. Actually, we just look, they're very diversified, harsh environment solutions at a record. But if we go to the analyst expectations down here, every quarter it's a triple beat from specifically data center demand, revenue beat, EPS beat, and EBITDA beat. Triple beat every quarter. So the revenue is up 53. This is why the stock's at an all-time high. The revenue is up 53 and the net income is up 106. So that means in English, they're expanding margins. Their net margin went from 15 to 20%. They've never even had 20% margins before. So they're expanding net margins. The FCF, which stands for free cash flow, is at a record up 150. So I'm saying, companies with financials like this absolutely deserve this crazy stock price appreciation. Plus, they're a serial acquirer. They acquire so many companies. They acquired CommScope's broadband business. They actually saved this company from bankruptcy. Amphenol bought the company and all their debt too, so it saved CommScope because they were in a mess of a balance sheet. But they just sold off their best business, their connectivity and cable solutions business, to Amphenol, which grew 51% year over year. That is why there's going to be even crazy more growth for Amphenol. There's so much more I want to actually say about that, but no one cares, so we'll just keep on going here. Is this a recording? No, Select, this is live. What's up, man? Yeah, you can see the time in the top left, and I guess you can check your own Amazon. Right now, the price of Amazon is $2.19. Okay, but yeah. By the way, if you want to hit the follow button, we stream every day. So yeah, all right. Kratos, let's do Kratos. So that's a government defense company. They're also a drone play. I was listening to the earnings. They were able to raise prices on their government software solutions last quarter. I haven't listened to the most recent quarter, but they were able to raise prices on their government software, whatever. So analysts expected 305 mil of revenue. That's the orange line there. That's what the analysts expect them to report. And then they reported 351 in this quarter as well. It was a major beat on revenue, major beat on EPS. So that's what's really interesting about Kratos, is how they're beating on their revenue. We can see their government solutions grew 23% year over year, and then their unmanned systems, which is their drone revenue, grew 35. It actually has never been over 87 million before. Record drone sales, and they're net income positive every quarter. So they're actually making money, and a good balance sheet. But the valuation is too insane. What's the forward PE? A 200 times forward PE. So they're trading at 212 times next year's net income. So it's a bit of a tough one. Hey, I'm from Jamaica. I stop all the time, but it's my first time in the chat. Hey, thanks for saying hi. I appreciate that. It's Thursday school. Hey, yeah, T3. Yeah, hey, thanks, man. Uber is going to be on the weekend and Roblox. So Uber, I think, is a steal of a deal right now. Uber is a great company. One stock I Here's what concerns me about Roblox a little bit. I'll give you my thoughts on them. Check this out. So if we actually, that's a big Kathy Wood play. If we go to the Kathy Wood portfolio, uh, oh wow, Roblox is, well, it's only 3.6%. It used to be a lot more, I guess, when the stock was up here. But here's why I wouldn't buy Roblox stock. And I can tell you why they've been doing so good, because it's like a mixed bag. Some metrics are doing insanely well, but it's the net income they're losing. But look at this, what's almost hard to believe. I don't know if this is propped up on AI bots or something, but their daily active users went from 88 million to 150 mil. I want to hope that's real. That's insane, the revenue growth or the daily active users growth. But the thing that sucks, and why I don't know if it's true, but these numbers aren't great. They literally lose 200 million plus of net income a quarter. And those losses are kind of getting worse too, but they're losing 200 to 300 million net income a quarter, and they have a lot of liabilities. They're leveraged. They have a lot of debt to pay. So that's what I'm a little scared with about Roblox. I love the growth, like the free cash flow as well. Really good free cash flow, really good revenue. But the fact that they lose 200 mil or a billion of net income a year does scare me a little bit. But they're certainly interesting because they're a big game company. Actually, if you like game companies, this is like the best one of all time. If this was an American company, they'd be in the Mag 7. They'd replace Tesla. This is Tencent Games. They literally own, what's that called? Riot Games. So if you've heard of League of Legends and Valorant, they wholly own that. So they own League of Legends, Valorant. They own 48 or 49% of Epic Games, which is Fortnite. So they own Supercell. So Clash of Clans, Clash Royale, they own that. They own PUBG. I mean, the list just goes on. So that's a beast of a company. They print money. Why is Uber down? Uber's down because, first off, because the market's down. But one thing that I think is putting extra pressure on Uber today is Waymo just did a big expansion today. Yeah, Uber on pace for largest decrease since April. Kind of got buried in the news, but it was there. Uber, oh yeah, it's kind of AI tool launch and Waymo expansion. They're expanding Waymo into a bunch of new cities, and that's kind of a like Uber competitor, autonomous driving car. Anyway, I think it's worth buying the dip on Uber. So OFM stock, let's see right here. Wait, I type in OFM. Unfortunately, I can't find that one. I did try and find it. Since I entered the market, it's been really fast nowadays. Yeah, Uber's down because people are broke and can't afford these ridiculous prices. Well, actually, the ridiculous prices might be why people buy Ubers because they can't buy a car or something. Or if you only use a car certain times a month, a few times, it might be worth it to have a Uber. Or it might be cheaper to pay for an Uber subscription uh, um, than own a car. I don't know though, but yeah, something today specifically sent the stock down 7%. But they're still making a great amount of money, $1 billion in net income a quarter. The free cash flow is even better. They're doing $2 billion plus of free cash flow. But yeah, let's see here. What's this app? Robinhood. Yeah, hey, actually, this app right here is called Moomoo. This is actually a software brokerage, or these are all brokerages right here where you buy stocks on. If you want to get any of these apps, they're all in the link tree in my bio. This was my favorite one right here to buy my favorite brokerage. Free, cost nothing, no commissions. Very first link in the link tree in my bio. Okay. AHR. What's this one? AHR. Oh, American Healthcare REIT. Yeah, look at the growth of this one. It's at an all-time high today, kind of immune from all the AI stuff. But yeah, they are a senior housing care REIT, a triple net lease REIT. Let's actually go look at them. Wholly owns of healthcare real estate. So yeah, 19,000 senior housing and skilled nursing beds. Wait. Oh, it's loading. I thought it said 0. 291 healthcare properties, 19 million square feet of management. So yeah, they're a big one. Let's go check out their revenue specifically. Or let's see. Integrated Senior Health Campus. Nice growth there for a REIT. It's really good. Senior Housing Operating Properties, that grew 22% a year. So anyway, I think another one of these is like a CTRE. That's a great one. CTRE is another one that basically does the same thing as they do. They're at an all-time high as well too. Welltower, this one's in the S&P 500. Yeah, look at Welltower. Oh my goodness. Yeah, I guess these senior housing facilities are doing great, I guess. Wow. Okay. Let's see. Marathon. Yeah. Hey, Christopher, the thing is with Mara, I never would really recommend a Bitcoin mining company over actual Bitcoin. I've looked at, I'm not just picking on Marathon. I've looked at every single one of these that exist. Hut 8, Core Z, Hive blockchain, CleanSpark. I've never seen an actual Bitcoin mining company actually outperform Bitcoin. And of course, yeah, there's kind of the price of Bitcoin versus Marathon holding. So in simple, I'd recommend Bitcoin over any other of these Bitcoin mining companies like CLSK as well. Like they just don't actually perform. Um, okay. Um, let's see here. Moderna. Okay, mRNA. Oh, and then we'll look at OMF after this. So yeah, here's Moderna. This one, sold a bunch of COVID vaccines, but the growth is completely gone. Yeah, dang. They're the same prices they were right before COVID. Look at that decline. That's rough. And here's kind of what justifies that. Here's kind of why they deserve to be doing that bad. Here's the rough part. Look at the year-over-year growth rates. Like down 45% year over year, down 41, down 35, down 65. Like the growth is super negative and they're burning through a lot of money. A billion, 900 mil, 800 mil, 200 mil. So these, and that's hurting their balance sheet. It's tough just simply because the revenue growth is gone and they're still burning through money. I'd rather buy, and I still wouldn't really own this one, but I'd rather buy the dip on like a Pfizer, or actually AbbVie. AbbVie is best healthcare name ever. Um, okay. People lose their Bitcoin, forget passwords. Yeah, that's why I like buying IBIT. It's pretty much safer than in a safe because it's SIPC insured for 250K. So yeah, even if BlackRock messes it up. So okay, OMF. Let's see here. OMF. Let's see here. This is One Main. I actually haven't heard of this company before. Is this a REIT? Because I kind of looks like one. Let's see. So, an insane dividend. They have a 7% dividend yield. What are they? So, credit services. So, they're not a REIT. Consumer and insurance, acquisitions and servicing. So, they must have like some negative. Wait, that's old. Yeah, wait, that's from. So, here's 2025. So, this quarter specifically, they beat on revenue, they beat on EPS, and they beat on EBITDA this quarter. So, actually, yeah, if we go to their net income, they're really making 100 to 200 million of net income a quarter. Or let's average it out. Let's say they make 180 million of net income a quarter. Let's go see how much the dividend cost. The dividend cost 125 million. So it does look like the dividend is kind of safe. It's the growth. What's the sales growth? So the revenue is up 9. So I don't know. They're interesting. It looks like the dividend is safe. And actually, stock's done pretty decent. Yeah, it looks like they can afford the dividend. If they're making 180 plus mil in net income a quarter, like they are the past year. They're a lending platform. Oh, okay. 24% plus emergency loans. Rocket Lab? Yeah, hey, Rocket Lab. This is out of all the space stocks that exist, this one is my favorite one, but they lose too much money for me to meaningfully buy them. Let's see if there's any news right here. Rocket Lab's Explorer spacecraft launched successfully for NASA Mars mission. Rocket Lab completes defense mission for military using HASTE vehicle. I wonder what that looks like. Okay, actually, maybe we can. But anyway, if we just go to the revenue right here, and I've looked at ASTS Space Mobile, I've looked at Lunar. This one's the best one, but I still wouldn't have it as a meaningful size position. But I love the growth. If we look at the revenue, this is what's crazy. The revenue's up 36%. After grew 81. After grew 15. So they're on a nice streak of growth, and not just the space systems, but also the launch services up 95% year over year. Not too shabby. They still lose, unfortunately, like 50, 60 mil of net income a quarter. But as long as they keep up this top line growth, revenue's up 50, after grew 50, and they just acquired Geost, that's why they diluted you by 400 mil to buy Geost. But anyway, Rocket Lab's interesting. What app do you use? Yeah, hey, by the way, this is actually a brokerage. If you want to get this software I'm on, it's in the link tree in my bio, the very first link there. It's a software you buy stocks on. They ask for a bunch of information. Or actually, all these are Robinhood, Webull, they're all brokerages. They all send you a tax form at the end of the year. Okay. Anyway, let's see. Yeah, they're all in the link tree in my bio. The one I'm on right now, Moomoo, very first link in the link tree in my bio. Let's see. CYD, what's that one? So this is, I don't know if this is the one you're talking about. Looks like China stock or a $1.3 billion company. So very small market cap. Yeah, they're a Chinese company. So we'll convert the currency from Chinese yuan to USD. So yeah, 99% of their revenue comes from China. Uh, Revenue's up 30. Oh, that's from 2020. Do we even get their most recent data? No, we don't. So that's weird. Anyway, there's some momentum over there. I just bought Rocket Lab. Oh, hey, nice. I again wouldn't have Rocket Lab as a real big size position. At least not yet. But the risk reward is interesting. Let's see. Oh, wait, is that a stock? OLED. Then we can look at INFY. Hey, what up? Ritor. How's it going, man? What up, Looney? Shout out to the member Looney. So here's Universal Display. Yeah, ticker symbol OLED. Unfortunately, the stock is the same price that it was in 2017. Let's see if we can figure out what happened there. So organic light emitting diode. Oh, I guess that's what OLED stands for. Oh, hey, I guess you learned something. So OLED stands for organic light emitting diode or whatever. 100% of the revenue comes from the US. Well, let's see. Revenue is negative. So that might have caused, that's why they fell so hard on this day. That was earnings day when they reported those numbers. Did the analyst expect that? Yeah, look at that. So the analyst expected 165 mil of revenue, and they only reported 139. So that was a big miss on revenue, but they still made a good net income on that. They made 44 mil of net income and an absolute fortress of a balance sheet. If you actually look at the operating profit, the operating profit should always be a bit higher than the net income because it doesn't include the interest and it doesn't include the taxes they paid. So operating profit is like it's the number that doesn't include the one-time adjustments or the taxes, and the net income does. And what I noticed is I bet they're making a bunch of interest on their cash, or about $1 million a quarter, or no, 10 mil. Yeah, they made 10 million of interest just on their cash because they literally have $600 million of cash, and it's earning them interest, and they don't have any debt, so they don't have any negative interest. So yeah, that offsets the tax. Anyway, interesting. That miss on revenue though was not good. INFY, Infosys. Yeah, that's why I always look at the numbers. Like the numbers in the long run always move the stock. Like that's why they gapped down on that day because they missed on their metrics. Okay, so here's Infosys. I actually haven't heard of this one, I don't think, but $71 billion company. Dividend, they have a pretty good yield, a 3% dividend. They raise that every year. They just bumped it up, but the payout ratio does look a little high. Let's go investigate that. So the PE ratio, so the price to net income is a 21. I guess that's right in line with the industry average of 22. So they're in financial services, manufacturing, retail, energies, utility, communication. Life sciences, they are diversified. Wow. Is this like a holding company or what do they call themselves? Digital services and consulting company, end-to-end business solutions, and all those industries. Okay, let's just go look at the revenue. So the revenue growth is low. These are single digit, 3.7, 4.8, 3. So low, mid single digits, but they still print net income. Easily 800 plus million of net income a quarter. So they're making 800 plus million of net income a quarter. And the dividend cost, I think 500 mil a quarter. But yeah. Anywho. What app? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, that very first link there. What do you think about Uber? Yeah, hey, we've looked at Uber like so many times today. It's actually the very first stock we looked at on the stream. By the way, if you miss anything, we're also streaming on YouTube. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. You can just type in YouTube Nathan Robert. That's the best way to support me. But yeah, Uber, I think is a steal of a deal right now. I would have a watch list of stocks you should buy the dip on. Like, or have a watch list of stocks ready you want to watch if the market keeps on going lower. All right. VG stock. What's this one? Venture Global. Yeah, if you guys got any stocks you want me to look at, let me know there. I'm reading both chats here. So this brokerage is telling me that there is a bullish continuation wedge. And it says the rise probability is a 95% chance. So I guess from a technical point of view, the stock is expected to go up. But let's go look at their actual numbers because, I remember this stock. You know what? This one's interesting. They own these like oil rigs in the middle of the water or something. And they're like just now getting, like the sales are just now coming, or they just got one more online or something. I don't remember exactly, but if we go to their net income down here, This is insane. I mean, and that's real too. Yeah, they're easily making 500 mil plus of net income every single quarter. Uh, Free cash flow is negative, but I guess analysts they've then that's a miss on EPS. I guess the EPS is expected to grow. EBITDA is supposed to grow. So I don't know much about this company, and I wish I could tell you more here, but I'm pretty sure if we go to their website right here, um, it's some sort of like I don't know, like LNG product. Okay. Let's see here. Market, yeah, Dino, what up, man? Yeah, market is not happy today. So HOOY. Oh, this is a covered call yield max ETF. Yeah, hey, you would buy this to maximize your dividend income. You won't outperform the S&P 500 and you won't outperform Robinhood with this ETF just from how, especially the yield max ones, just from how math works. These kind of always slowly bleed out your capital to zero. Especially the yield max ones, which do the return of assets or return of capital and the 1%. Yeah, 1% expense ratio on this. You're buying an asset that you respected cover call investors say this. This will not outperform the S&P 500's 8 to 10% CAGR. So you're already underperforming the 8% a year from the S&P, and you're already losing by 1/8 with this 1% expense ratio. Honestly, you buy this to maximize your income, and I would trust myself. Like we can look at TSLY, like just based off how all of the yield max, like here's TSLY. Tesla's not at an all-time low right now. Or Tesla's chart doesn't look like this, but here's the chart of Tesla covered call. What about the NVDY one? How's that one doing? NVDY. Well, actually, I look at this one, but yeah, you'd buy it to you maximize your income. Yeah. Okay. I didn't mean to like bag on that too much. Okay, so Futu, yeah, Josh, Futu is a steal. Why not look at yeah, hey Jacob, what is that? Give me the ticker symbol. Yeah, if you guys got a stock you look at, give me the ticker symbol. I don't know. I don't know what that is. FBLG. What's this one? Fiber Biologics. Hey, we don't really cover these kind of stocks on here. If you look in the very top right, the market cap, the whole entire market cap is only worth 16 million. So we don't really cover these, and it's at an all-time low. So this is just some junk. Let's see. Yeah, they deserve to be. Do they have revenue even? No revenue. So there's a startup. They have no revenue, never sold anything, not a product or a service, and they lose 5 mil in net income a quarter. And they now have more liabilities than assets. So kind of think about this logically. You could buy the whole company for 16 mil. Let's say you do it. You buy the company for 16 mil. You're buying a business that lost 5 mil, 5 mil, 5 mil with no revenue, lots of liability. It's a tough one. I can totally see why they're at all-time lows and not a stock I'd want to own. Wait, that's a weird ticker symbol. I hope I can find that one. That's probably why I've never heard of it. Yeah, hey, what was the name of it? Maybe I can find the TELUS. Or is this it right here? TELUS Corp, or maybe it's TU stock? I'm just going to assume this is, I'm sorry. If you got another stock you're look at, let me know here, but if this is in it. But yeah, 20 bill market cap company. Wow, an 8% dividend. That's a crazy dividend. They are a Canadian company, so we'll convert the currency from Canadian to USD. Let's go investigate. Is the dividend safe? Because that's what I like doing. So it looks like last quarter they had a one-time adjustment. Yeah, if we go to the net income, it says they lost 180 mil. They didn't actually. So that's why when we go to the payout ratio, it says a 200% payout ratio. It's not actually because it includes that one-time adjustment. But anyway, they're making, let's see, 200, well, let's call it 250 million of net income. That's maybe a little too generous, but 225 mil of net income a quarter. Oh, and the dividend costs 290 million. Dividend costs well, they could afford it this quarter. They made 300 million net income this quarter, but I'm not seeing it. They're not really can afford that too much, but they can from the free cash flow. Maybe this is some utility. Maybe you look at the free cash flow, or what is the FCF? Yes, 600 mil of free cash flow. So yeah, I don't know. It looks like the EPS / net income. Yeah, you go to the EPS, which is net income per share. The EPS was 23 cents. And the dividend is 31 cents. So yeah, they might not be able to. The dividend looks a little risky there. TELUS is Canadian phone company. So they're like a Verizon or an AT&T, just Canadian version. Yeah, again, I don't. their stock probably looks just like Verizon. They all have super high yields like this. If we look at Verizon, you get a 6.6% dividend, but you don't really outperform the market in the long run. You kind of buy it to maximize your income. Did you know Verizon is actually the same price that it was back in 1997? So if you bought the stock in 1997, it's the same price that it is today. Um, okay. BROS. Yeah, hey, that's Dutch Bros. I actually like this one more than way better than if I was going to buy the dip on Starbucks. A lot of the restaurants are struggling hard right now. Chipotle, Wendy's, Jack in the Box, their stocks have done awful. It's Krispy Kreme too. But here's Dutch Bros right here. They're relatively new. They're opening up new shops. If you go to their company operated shops, this growth in the middle here is really impressive. Again, mostly just from opening up new stores, but revenue's up 27, after grew 30, after grew 36. And they also collect this royalty franchise revenue. So their franchising revenue grew 2.7% year over year. But anyway, if we go to their net income, they're actually making good net income every quarter and it has a good growth rate. And especially for right now's environment where all the restaurants are struggling. Like look at Wendy's stock. Like Wendy's, for example, unfortunate, but pretty much all-time low. Actually, Wendy's stock is lower than it was in 1997. I think Jack in the Box is as well. Ticker symbol Jack. So the industry's getting competitive. The fast food wars are happening. I'd buy McDonald's too. McDonald's, Yum Brands, which is Taco Bell, KFC. Would you start buying growth stocks right now or wait? I would nibble. If you have the intention to just never sell these great assets, like I'm not sure what stock specifically, but like Meta, like if you have the intention to never sell, like certainly worth nibbling and buying right now and today. Not like Uber as well. I think Uber's worth buying today, not as a major size position. Like you start them out as little tiny nibbles. And then once they're down 10% or whatever, that's when you add more. That's how I originally started with Webuy. I started out with so little amount of shares and then I dollar cost average in over weeks. So I like, you got to have more discipline and it's more patient approach, that dollar cost averaging, and it'll kind of save you in markets like this. Yeah, look at this. Our whole portfolio is red today, but the only stock green, or I guess very slightly, is McDonald's. McDonald's is a slight defensive name. Is anything green in our Roth IRA? Nope. Or I guess Webull stock reports earnings in 1.5 hours. So that's this app right here, publicly traded. But look, here is our Webull portfolio. This is why you don't listen to me, not financial advice. I'm not an expert. I literally sell nothing. I'm just a college student. Look at this. Our open profit and loss, we're only up 7%, 6.9% all time in here. We're down 3% of the day, mainly led by AMD, Robinhood, SoFi. Hit the like on the street for me. We were losing a lot of money today. But I'm not worried because this is just stocks doing normal stock stuff, and I'll be looking to buy the dip. Hey, what up, Glenn? Good to see y'all. Why do you think Yum Brands has successful than other business models? Yeah, it's because of their business model. Like Yum Brands and McDonald's specifically, these are actually like real estate royalty companies. Like McDonald's more, but yeah, Yum Brands, they own KFC. They also own Taco Bell, which are two great assets. Actually, fun fact, Yum Brands used to be owned by Pepsi, literally the company Pepsi, and that's why you only see Pepsi products at Yum Brands. They still have a lifetime contract where Yum Brands and all their restaurants can only serve Pepsi products. So that's why they're always doing the Mountain Dews and stuff. You never see Coca-Cola stuff at Yum Brands. But anyway, yeah, they have a 2% dividend yield. And here's how I haven't looked at it in Yum Brands, but here's how it works for McDonald's. If you go spend $100 at any McDonald's, they literally keep $4 of that as a royalty. And they also own the land under 80% of all the stores. So every franchise pays them rent every month, even in a recession, unless the franchisor goes bankrupt, which never happened. But actually, historically, in a recession, McDonald's sales go up. People stop going from Chick-fil-A and Starbucks and Texas Roadhouse, and they will you go to McDonald's because the value is now finally back there. But anyway, and also in a recession, they buy a bunch of cheap land. But yeah, this one's like a nice defense name. I'm totally biased. I'm a big shareholder. I got 17 shares in them. But yeah, I just love the business model. They're really real estate royalty companies. Nice defense. Yum Brands, McDonald's, these are not the kind of stocks that are going to outperform the tech-heavy S&P 500. But they're good on days like today where everything else is super red, but McDonald's is green. I think Yum Brands was green too, but anywho. Let's see. Appreciate you offering some comfort. Hey, what up, Mimi? How are you doing over the last month? Well, I don't know, or it depends on the portfolio. It's hard to track that. Or let's see, past month and here we are down 6% the past month. Yeah, here's us year to date. I love being fully transparent. You got any questions for me? I'll share with you all my portfolios, my total lifetime performance on every portfolio. Like look at this. Open, we're only up 7% all time. We're down 2%. Uh, how are you? This is year to date. Past month, we're look at that. We're down 11% this past month in this portfolio. Yeah, we also get a little dividend. Who we get a dividend from? Call Maine. How about the year-to-date dividends? Anyone like dividend stocks? Yeah, Call Maine, Progressive, T Rowe. We used to own some T-Mobile in there. T-Mobile, I think, is at a pretty good price now too. But anyway. Okay, can you give me two good companies to invest in? Hey, again, none of this is financial advice. I'm not an expert, but first off, buy the S&P 500. Like most individual retail investors and hedge funds literally cannot beat the S&P 500's CAGR of 8 to 10%. So you gotta at least own it somewhat, but you gotta have the backbone of your portfolio in the S&P 500. Then you play around with some individual names. Buy the S&P 500, then buy some S&P 500 names that you know, love, and use. Buy companies you love and use. Meta, McDonald's, Google, Constellation Energy. That's where our natural gas bill is through. Amazon, Robinhood, SoFi, and I own all these things. So. And of course, always go do your own research on it. Like I use Ford, but I wouldn't buy Ford stock because they're kind of junk. But anyway, like Microsoft, Apple, Google, Meta, all great companies. Amazon. Okay. Let's see here. Just maxed out my Roth. Oh, heck yeah, dude. Yo, you're doing better than me. I got to get there toward the end of the year. Yeah. Did you know a Roth IRA is so OP? This is a tax-free retirement account. It's so OP that the government does not allow you to deposit more than $7,000 a year. And I'm pretty sure if you make over, I'm not sure the exact six-figure amount. Maybe it's like 200, 300 grand. I don't know. They don't allow you to contribute to your Roth IRA because it costs the U.S. taxpayer money. So anyway, you get your tax-free return. So that's what's so cool about a Roth IRA. You double, triple your money on a stock, 10x, whatever. No taxes on it. That's why I also own my REIT in here, Iron Mountain in here. This is a REIT which pays non-qualified dividends, and those dividends are completely tax-free in the Roth. Okay. Yeah, 401k. Yeah, you got to have if you can, get that employee match, And what's cool is with Robinhood, we have to pay $5 a month, but they actually match me 3%. So if you notice, like I've deposited $4,000 this year, they've matched me $140 of that. Hopefully I'm not showing something bad there, but anywho, yeah. Can you analyze uranium energy? Hey, what's the ticker symbol for uranium energy? What's up with Ferrari? Yeah, hey, Ferrari, I just think this is a good quality company. Again, in this, how the market is right now in this environment, I love Ferrari, but notice I only own 3 shares of them. It's a relatively small position for me. I'm dollar cost averaging into them. So I'm starting them out. I think right now is a fair price to start a position in Ferrari in, but not as a meaningful size position. Like I have stocks like this all the time where I want them as eventually like 5% of my portfolio, but valuations are so nuts today that you start them out as 1% of your portfolio today, but you only buy them more once they're down. Like that's why like PSIX, as much as I love them and I'm so bullish on them, I only own $200 of them. And Supermicro, I'm actually like bearish on Supermicro. I'm only 10 shares in them. Like the stocks I trust the most, I keep the most amount of money in, like McDonald's, Coca-Cola, Consolidate. Look at that. I love these defensive names like Coca-Cola, Consolidate at an all-time high today when the market's kind of having its shenanigans. So, let's look at Cormedics right here. So this is the great example of kind of what I'm talking about here. Here's a company I love. I'm extremely, extremely bullish on them. I think this is a 3X, like easy 3X. I'm like the most bullish person ever, and I really believe that. And as much as I believe that, I only have this as a $700 position, and I will not. I don't really plan to add more to this position, even if they fall. As much as I'm bullish on them, I'm not going to have this as a major size position. But let me tell you why I love this company. The whole kind of, and I don't normally like these kind of stocks, but the whole entire company is worth $760 million. So kind of think about that. The whole company is worth $760 million. But here's the best news. They are making it's so hard to like explain all this, but they just bought a company for $300 million. Before today, they had no debt at all, but they issued $100 million of debt to buy this company to diversify them away from a one product portfolio. Like this quarter specifically was game changing for them because they just acquired a business. So that's how the sales literally went from 11 mil to 104 mil year over year. Operating profit, this is a real number, 51 million. So what I'm trying to say is the price to net income, the PE ratio is a 4.4. They trade at 4 times net income. They have this deaf and catheter product. This is their main, only FDA approved version of it. And they have insane margins on it. They have 95% gross margins. And with this new Malenta acquisition, it bumped their margin down a little bit. But anyway, CorMedix is really cool. And again, as much as I love them, I only have them as a super small position. But yeah. Is this your brokerage account? Yeah. Hey, what up, Clint? Yes, sir. Or all these are, yeah. Let's see here. Analyze NUVB. What's that one? Yeah, we'll look at a few more stocks here. Dang, we've been streaming for 2 hours and 20 minutes. My head's starting to hurt a little bit. Just been sitting in a room talking, but it's so much fun, especially on a day like today, because we get to look at high quality stocks. About like Uber, I think is a steal of a deal. Meta is a steal of a deal to nibble on today. Duolingo looks pretty good right now. So yeah, here Home Depot. We've been Home Depot, diversified little higher yielding name. I think it's interesting here too. But here's Nuviation. Never heard of this one. A $2.3 billion company. They had a look at that yesterday. The stock went from 480 to 7. What was there any news specifically? Jumps to 3-year high on bullish coverage. What does that mean? Do you know the news there? Let's go look at the revenue. So here's the right now revenue. The revenue, wow, it used to be 0, but now it's 13 million this quarter. So the revenue was 13 million this quarter, but analysts are expecting next quarter it to be 32 mil. And they have a crazy beat. Like this quarter, they expected 6 million. They did 13 million. So that was a double. So that's certainly interesting. Are they net income positive on that? No. Ooh, so they're still losing 50 million in net income a quarter, which is a lot. It's about 10% of the market cap a year. But as long as they can narrow that and continue the growth, it's interesting as maybe a super, super small position. I don't know. Do you have a 401k? I do not. All I have is a Roth IRA in my taxable accounts. What you buying these days? Oh, hey, yeah. Those stocks I just said a second ago, but yeah, I've been buying the dip more, and some of these are new positions. HCA stock 2 days ago, and this has not been timed too well, but we bought like $700 worth of Iron Mountain. Look, so you see how it like dropped down instantly? We bought $700 of the stock, and then literally a short report comes out about the company from Gotham that says the stock is worth no more than $40 a share, and it's 80. Yeah, but anyway, yeah, CorMedix have been buying. Oh, and Webull, actually, this is the stock I've really been buying the most. They report earnings today, and yeah, we just been dollar cost averaging into them, so they're expected to move after hours. That should be interesting. What was that last symbol? Ooh, I don't remember. By the way, if you missed anything, I'm also streaming on YouTube, and you can like rewind it on YouTube, which is cool. Yeah, but that's the best way to support me. Just subscribe to my YouTube channel. But yeah, I think it might have been NUVB was the stock there. Okay. Can't decide on buying Amazon, Futu, or Uber. Yo, let's buy all 3 of them. All 3 are phenomenal. Never sells. Like it's like those are great. Yeah. I can't believe Amazon has basically sold off all this phenomenal good news. You know, they've sold off the $40 billion contract they got from OpenAI in the net income, like the cloud growth, like it was nuts this quarter. And Amazon's such an innovative growth beast. Amazon's a great never sell. Uber, Futu. Yeah, dude, Futu, I'm like crazy bullish on Futu stock. Are they recovering a little bit? Let's see. What's down the most on the day? Actually, we do. Our progressive is up. Let's go. Clear Secure is up a little, but yeah, AMD's down 6, Futu's down 6, Robinhood's down 8. So not. Oh my goodness. Okay. We're back. TikTok just made me fill out a CAPTCHA because it thought I was AFK. All right, but yeah, let's look at SoFi right here. I do own SoFi. I'm totally biased because I'm a shareholder, but here's why SoFi definitely deserves all this crazy stock price appreciation that it's had. Again, the forward PE, what is it? A 42. It's still a bit expensive, but here's why SoFi definitely deserves this rally. They're off like 25% from the peak. Like the risk reward starting to look great in the low 20s. Like, so anyway, SoFi Technologies though, here's what's crazy. If we go to their financial services business specifically, check out this growth. No analysts were expecting this. It's up 76% after it grew 101, after it grew 140, after it grew 90. So they're just on a streak of growth. And here's the actual analyst expectations. You know, they beat on revenue every quarter, beat on EPS, beat on EBITDA. So pretty cool. I'm on the way to meet with an advisor from Fidelity. So much info, I don't know what to invest. Yeah, honestly, you don't got to complicate it. Just buy, first off, with most of the money, just buy the S&P 500. Most people can't and don't outperform the S&P 500, and not just people, retail investors, but hedge funds too. And that's like it's like the one boring piece of advice that like people overlook because they think it's so boring and everyone's doing it. But how the ETF structure works and how ETFs can sell stocks for another tax-free for you, it's so hard to beat the S&P 500 because of the tax benefits the ETFs get. So I would just buy the S&P 500 as the majority of your portfolio, then buy the S&P 500 names. Every stock in this portfolio right here is in the S&P 500. Every single one of these: McDonald's, Google, United Rentals, Meta, not these, but Amazon, Coca-Cola. Like, buy companies you know, love, and use. What ETF do you recommend? Yeah, first off, is a S&P 500 is ticker symbol VOO. You just buy and forget it. It breaks your money up for you into the top companies by market cap because Nvidia is worth the most in market cap. They're the largest holding, and they let their winners win. Some ETFs out there, like, think about this, like, Nvidia is 8% of their portfolio. Like, imagine if they sold or trimmed out of or completely sold out of Nvidia at $100 or way lower when they were. It's because how they don't sell and trim profits. It's market cap weighted. So anyway, I just love that the S&P 500, and more an ETF that has outperformed that as well is the Nasdaq 100. It's a bit more tech heavy. QQQM is the ticker symbol for that. It's just more kind of tech heavy. Nvidia's 10, Apple's 8, Microsoft 8, Broadcom, Amazon. So yeah, and what's that ticker symbol? I can't remember. I had some other ETF I wanted to talk. Oh no, this is basically an ETF. Berkshire Hathaway. This is Warren Buffett's company that historically I think has outperformed the S&P 500 every year, or right around the same return. So yeah, here's Berkshire Hathaway is another kind of, like, you want to have a diversified portfolio. And yeah, they fully own Geico. Geico is crazy. We actually just canceled our Geico. Don't tell them. But manufacturing, McLean, Pilot. Okay. Anyway. We'll look at a couple more here. What's the difference between INX and VO? INX is an index fund. So yeah, you can't buy index funds on an exchange, but you can buy an exchange traded fund. And that's just ticker symbol VOO. Best, cheapest, 0.02% expense ratio. So no fees, call it. Someone said, I give up. Hey, don't give up. SCHD or SCHG. Yeah, SCHG. This is the another QQQ competitor, or I think Nasdaq 100 strategy, or actually they might not be the Nasdaq 100 strategy. Yeah, large cap growth ETF. But if we go to their largest holdings, yeah, Nvidia, Apple, Microsoft, Amazon, Broadcom, Google, so pretty much the S&P 500, but a little different. Ooh. You reckon now's the dip, or there's going to be a bigger rally? I think to say that the S&P 500 will never go lower than what it is today, I can't claim that. But I nibble on this dip. I'd buy a little bit of it. Wouldn't spend all the cash today. Like like Meta and Uber, I see are really good. Hey, it looks like we're maybe getting a somewhat of a sympathy. Looks like Uber just bottomed at 83. Hopefully. What do you think of Nvidia right now? Yeah, Nvidia right here, their earnings were good, but it was some like 10Q report they reported this morning where investors got a little, I guess, upset with them about their circular financing. Like, they're basically giving AI startups a bunch of money, and that money that they give to them and the stakes they take into those companies, 80% of that money just comes right back to NVIDIA. Like, NVIDIA took a $100 billion stake into OpenAI. OpenAI owns 10% of AMD. They give money to CoreWeave and loans to CoreWeave so they can buy chips. But their numbers were great. That's the thing. Net income was $32 billion, after they paid $5 billion of taxes. Like, that's what's crazy. If another company can pull off this sort of net income growth, they also deserve to be worth $5 trillion. That's another thing about the law of large numbers does put a strain. Like, the whole company is worth $4.46 trillion. If you buy a share today, for you to double your money, they got to be worth $9 trillion. So, but I love them. The real pain will come February. Hey, what up, Dave? Can you stay until Weeble earnings? Nah, I've already been streaming for 2 hours and 30 minutes. I I gotta go soon. But hey, if you guys want to hit the follow button, I appreciate y'all. We actually stream every single day, sometimes twice a day. I might do another stream later tonight for fun. Yeah, we stream every single day. I literally sell nothing. I have no course, book, WhatsApp. I'll never ever follow you. Never, not in a mean way, but I'll never follow you, DM you. Someone said earlier, was that you that DM me? No, I'll never follow you, DM you, or I literally sell nothing. So only thing I do have is a YouTube channel. If you want to subscribe, that's the best way to support me. Subscribe to my YouTube channel. It's called Nathan Robert. I've been here for an hour, and you finally said, hey, what's up? Platform name, yeah, hey, this is actually a software brokerage. If you want to get this software I'm on, is in the link tree in my bio, the very first link there. It's a broker called Moomoo, or all these brokerages are all in the link tree in my bio. These are all apps where you buy stocks on. They ask for a bunch of information. These are all three of my fave. Okay, we'll look at a couple more here. Ooh, Netflix. So Netflix stock actually just did their split. So before today, one share used to be $1,000. Now it's only $100. But the valuation, I think, is still too tough to pay. They trade at 44 times net income. Spotify, Life 360, all these kind of software names kind of trade at this high multiple. But here's why they definitely deserve a high multiple. They have 300 million premium subscribers. Their ARPU, their average monthly ARPU is $11.69 per user per month, which is pretty insane. So if you just go to their net income down here, insane. They're making easily 2 to 3 billion of after-tax net income a quarter. Same with FCF, which stands for free cash flow, 2 to 3 bill a quarter. So yeah, it's actually, they had in the net income, it was actually higher than this. They had a one-time adjustment. They had to pay like a Brazil. Funny story. They had 600 million of backlog taxes to pay in Brazil. They've never paid a single dime of taxes in Brazil or something. And yeah, right in the very number 2 here, little backlog there, but Netflix is good. What are your thoughts on the Verizon layoffs? CEO effect on their stock price? Well, Verizon, AT&T, these are in terms of the stock, I would not buy Verizon or AT&T if you're far away from retirement. You buy these to really maximize your income. Yeah, Verizon stock is the same price that it was in 1997, so it kind of maybe it makes sense. So Verizon begins laying off more than 13,000 employees. Yikes. So but yeah, this is a big dividend play. You get a 6.6% dividend. What's the revenue growth? One thing, the government did a great job of splitting up all the 3 telecom companies. Like I just got to add, I think it was from Verizon or T-Mobile. It's literally just gone to the point where the ad was literally just like this. It said, just show us your old phone bill and we'll just get you a better deal on it. Like that's how competitive this market is. But yeah, look at the revenue growth. It's slow, low single digit, 1%, 5, 1, 1. So, you're not buying this to outperform the tech-heavy S&P. You're kind of buying that just to get a lot of income dividend. And same with AT&T. Like if you look at AT&T stock, dang, wow, they're the same prices they were. Yeah, also back in 1997. So T-Mobile has been a phenomenal performer though because they didn't suffocate themselves with a high dividend payout ratio. Also, T-Mobile gets access to AT&T's like bands for free after a failed acquisition or something. But anyway, T-Mobile has incredible margins. Like if we go to T-Mobile's net income, they're making easily 2 to 3, or we'll call it 3 billion of net income a quarter. And what is Verizon doing with 3 billion net income a quarter? Well, the reason why their stock is doing so much better is because first off, they don't have a bunch of debt to pay. Since they have so much leftover money, if you look at the top, they spend heck of money on buybacks. They spend double to triple the amount they do on dividends and buybacks. So they spend 3x more on share buybacks and dividends. And here's what share buybacks do for you as an investor. We go to the net income. It declined. I think that was a one-time adjustment. Yeah, it didn't actually, but the net income declined by 11.3. And the EPS, which is net income per share, only fell by 7.6. Again, the net income growth rate and the EPS growth rate should always be the exact same. Only thing that changes it is the share part of the ratio. And since there's so much less shares, legit, they've bought back 5% of all the shares or 6%, plus you get a 1.76% dividends. That's why this stock has performed way much better. And I love that stock. Sorry, just tuning in. Any reason why hey, what up, Plasma? Good to see you, homie. Hey, what up, Sean? Yeah, it's kind of a combination of NVIDIA's 10-key report this morning and just momentum. MP, please. Yeah, this is one of the rare earth mineral plays. The government took a 10% stake into MP Materials. Literally, MP Materials is opening up this one rare earth mineral mine that's going to supply the U.S. for certain rare earth minerals for the next 50 years. And they've already agreed to certain per like $110 like per kilogram price floor on some of these stuff. So it's really interesting. Let's see what this says though. Materials segment revenue fell 50% due to cessation of sales to China. So that explains that. Why? Yeah, magnetics revenue. Well, let's just go look at their actual numbers again. You really would look at the forward growth. Yeah, so bad numbers this quarter. Revenue fell 15%, but look what's expected in 2 quarters. The revenue is supposed to be $100 million. It's supposed to nearly double from this quarter. So, and the EPS is supposed to go positive next quarter. That's interesting. Anyway, it's kind of like a rare earth mineral play. They're one of the better ones. I don't know about its valuation though, because it's still a 10 bill market cap. I don't know what kind of net income they're actually going to be making, but if you're looking for like a swing trade one, that's what if the war fears and tariffs and escalations start to rise, like that, they will benefit. Unemployment numbers came out today. Highest reported percent this year. Oh, highest unemployment rate reported this year. Yikes! You know what? I think we might actually get those numbers on here, and we'll be super quick about this. If we can't, then oh well. But we should get, we do get all the data here. You can see like the CPI report, maybe not. Jobs reporter. You know what? I don't know. Where's the unemployment rate? Oh yeah, look at that. Unemployment rate looks like it's ticking up 4.4 for September 2025. So yeah, unemployment rate is going up a little bit. It's kind of cool to see the data. And yeah, we can see the interest rate cut. This is another kind of crazy thing. There's a 60% chance of no interest rate cut. What happens is, yeah, hey, what up? Cool. Yeah, by the way, this is a software. It's actually a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. It is an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. It's my favorite brokerage. Literally costs nothing, no fees at all, no commissions, no monthly payments, free brokerage, and you get 3.6% APY on your cash. Okay, so is NVIDIA worth buying now? It might be worth nibbling. You know, I think there's better risk to rewards out there. It's simply because of NVIDIA's market cap. I think NVIDIA will still return you S&P 500 type returns, 8 to 10%. But the market cap of 4.4 trillion is a tough double from law of large numbers. So I'd go with some of the NVIDIA beneficiaries like an Amphenol stock or Comfort Systems. Let's look at Astera Lab right here. I actually really like that one. ALAB. So Astera Labs, this one is really interesting. Is NVIDIA still a good buy after SoftBank sold all their shares? Yeah, honestly, NVIDIA is okay here. Wouldn't more unemployment mean higher chance of rate cut? More unemployment mean higher chance of, yeah, it should. Because the Fed is really focused on the jobs market right now. They already basically said they gave them the towel on fighting inflation. Inflation has really, from all the earnings calls of like Procter & Gamble, Coca-Cola, Pepsi, all the restaurants are having a war. Prices are, it's obviously up 50% since COVID, but I haven't seen really a crazy increase in prices of stuff. Like oil has been weirdly low this summer, so... But let's get back to Astera Labs real quick. $24 billion market cap. I really like this name. Let's see if there's any news around this company. Okay. Let's go to the revenue. Here's what's so impressive about them. They've been beating on every metric every quarter. They beat on revenue every quarter, the past 2 quarters, and on EPS, which is net income, and on EBITDA. So they've been triple beating every quarter. That's what's crazy. So the sales are up 103. The revenues have doubled. And their net income positive on that for the 91 mil of net income off 230 mil of sales in a freaking monster balance sheet. Like that's like the cherry on top. But the story keeps getting better here. They have 1.13 billion of cash, and that cash isn't doing nothing. That cash makes them interest. They made 11 million of interest since they have no debt, and they're making net income every quarter. They're really growthy. Expecting more growth. That's why I like this one. The valuation is still a little tough though. They trade at 95 times next year's net income. So you can kind of see why it's probably just getting back to reality, but this is the kind of stock that should have a high PE. It's quality, but it might actually go a little lower before higher. Ooh, do beware. Actually, I didn't know this. Whoa. Actually, wait. 70% and then 20% of the revenue is China and Taiwan. So yeah, the US is only 3% of the revenue. So that might also give them a lower multiple? I don't know. So, how many ETS stocks do you own? Too many, but I'm a stock picker, so I wouldn't I would never recommend anyone own as many stocks as I do. I just like because I'm a streamer. Anyway, I think around 20 stocks or less is around a perfect ratio. Like after I've seen the bell curve chart of diversification, after the eighth stock, you're not diversifying yourself meaningfully anymore after that. So around 8 stocks after that is like good. You don't want to really have less than 8. But yeah, here's this portfolio. This one has 7 stocks. Because the more stocks you add, the more you're gonna perform just like the S&P 500. Okay. All right. Yeah, we'll look at a few more here. Then I gotta go. Trav said CEG. Yo, this is one of my favorite. This is my favorite energy stock of all time. Favorite nuclear play, AI beneficiary. Like as these chips get sold, they still got to get powered forever. Like they're less like. Anyway, here's CEG. This is the company that literally owns 30% plus of all the U.S.'s nuclear reactors. It is the purest play for nuclear energy. There is no close second. Close second would be VST with their 4 reactors, but they own over 30 in just the US. So number 1 geothermal play, number 1 nuclear play, and they're in the top 10 natural gas plays in the US. And natural gas stocks have been going up as well because CEG has been talking about this. Data centers want the clean reliability of nuclear energy, but they need that 24/7 natural gas backup as an option as well. So they're acquiring Calpine. I'm so the Calpine acquisition is literally $2 accretive to EPS and over $2 billion accretive to their free cash flow. It was a insane acquisition. And on that day, the stock went up like 20%. And on the day that they did a big deal with Microsoft, they're literally reopening the 3 Mile Island nuclear reactor. They also just got a $1 billion loan from the DOE, but they're restarting a nuclear reactor, the 3 Mile Island one, solely to power one Microsoft data center. I have too many stocks. Yeah, Looney. I don't know why I said that. Yeah. Did you hear about Solana? Yeah, I don't really look at crypto. Just because there's nothing I can really tell you unique about Solana. Like there's no there's no net income or financials I can look at here. And that's kind of what people like about them. Like they can't miss on their net income or their, Lucid. All right, I'll bag on Lucid stock as the last one here, basically. Then we'll do a portfolio update. Yeah, Boeing is trash and Oklo is trash too. Yeah, I wouldn't own any of those. ASTS. Oh, actually, I do want to look at ASTS. But yeah, Boeing and Oklo I don't like either of those. Here, I don't like Lucid either. And it's simply nothing personal. It's just the numbers I don't like. I just don't like the company's financials. Like, look at Lucid right here. Like, Boeing has lost two to 3 billion of net income every quarter for the past 3 years straight. Every single quarter, Boeing just burns money, and they have like more liabilities than assets. Oklo is a revenue-less startup, SMR startup. So here's Lucid though. They're at an all-time low. Sadly, they deserve to be. And you could have seen that. Actually, I made a TikTok about it. You could have seen this coming. If we look at the market cap in the top right, the whole company is worth $3.8 billion. So kind of think about that in the back of your head. If you wanted, you could buy the whole entire company for $3.8 billion. But look at this. They lost $1 billion of net income this quarter. 550 mil last quarter, 300 mil, 40 mil. Just for all of eternity, this is a business that just burns through a super unsustainable amount of net income. And sadly, they've also been diluting you while the stock is at all-time lows, and they can't really do that anymore. So I can totally see why this stock's at all-time low. The whole company is worth $3.89 billion, and they lost $1 billion, which is over 25% of the entire company just in this quarter, not even adding the other quarters. Oh yeah, ASTS right here. This one there's a lot of future hopium around this name, but it's not as bad as a lot of other companies. If we go to the right now revenue, this is great news. Yeah, if we go to the revenue right here, so they just reported these earnings then, because this is what I was about to show you. They have no revenue right now. The revenue is $1 million or less a quarter, but this quarter was $14 million. That's what we were expecting. And then next quarter, it's expected to be $40 million. They did miss on revenue, but they they're basically transitioning now from a company with no revenue for the first time ever, basically having real revenue, 14 mil. Still, unfortunately, they're losing a couple hundred mil in net income a quarter. So I really wouldn't own this one with meaningful amounts of money or anything meaningful. Um, Space, 5G cellular, or space technology. I guess here's their website. Fancy space. I don't know. I probably would like Rocket Lab more. What happens is, yeah, hey, again, this is a brokerage right here. Software. If you want to get it, it's in the link tree in my bio, that very first link there. What's the Bitcoin stock? Just the name, please. Wait, you mean IBIT? That's the Bitcoin ETF, which is down 3.5% on the day. Robinhood kind of moves with Bitcoin. I don't know I don't know. What do you mean there, Looney? What's your favorite undervalued stock? Ooh, I think it honestly is undervalued. I think Meta. I think Meta's a fair value right here. Uber as well. I mean, Uber is at a freaking 17 forward PE. But yeah, all these are great. Well, Amazon I think is a great never sell. But the 30 PE is super fair for Amazon. Anyway, yeah. That's okay. Yeah. Let me give you a quick portfolio update, then I'll get out of here. Thank you all for being here. I'm going to end the stream here. I don't even know how I'm still talking. I've basically been streaming for 3 hours, but thank you all for being here. If you want to hit the follow button, we stream every single day. Let me give you a quick portfolio update. Oh, I literally sell nothing. I have no course book, WhatsApp. Please watch out for people impersonating me. I'll never follow you or DM you. Yeah, I sell nothing. But only thing I do have is a YouTube channel. So if you want to support me, the best way to support me, or the only way to support me, is just subscribe to my YouTube channel. It's called Nathan Robert. You can just type it into YouTube, Nathan Robert. It's also in the link tree in my bio. But anyway, here's our Moomoo portfolio. This is known as our buy and never sell account. We have a different goal with each portfolio. This one's called our buy and never sell account, where once we buy a stock in there, I try not to ever sell it. This is our dividend-only portfolio, where, as you could probably guess, every stock in here pays a dividend. See, McDonald's is the only green stock in here on the day. Yeah, we also have a Roth IRA. Hasn't done too well. We started it pretty much exactly a year ago. And then we have our Webull account, which is our kind of our risk-on portfolio. I kind of just do whatever I want. And this portfolio has not done too well. That's why you don't listen to me. Open profit and loss, we're only up 7% all time, but today we're down 3%. But yeah, here are all my holdings in here. We have some good winners in here. AMD, Robinhood. Some of my biggest regrets aren't losing a lot of money like on ChargePoint, where I lost $2,000 on them. Some of my biggest regrets are actually selling out of high quality names like Robinhood. I sold like 50 plus shares at $36. Now it's over 100. Same with SoFi. I regret every share I've ever sold of SoFi. But yeah, we definitely have some big losers in here as well. Like UiPath, some losers you can't see as well that I already sold, like ChargePoint. But like Zoom, UiPath, I deem these companies too cheap to sell. I can't take the loss on this one. They're too cheap. But some other companies, it's certainly worth taking the loss on, like Lucid. And I've never owned Lucid, or I was just saying, like, stocks with some terrible financials, it's always sometimes worth taking the loss on them. Okay, but yeah, here's our dividend-only portfolio, where, of course, every stock in here pays a dividend. Here's our total percent change on every stock. Luckily, we're up on everything except for Carlyle Group. We actually just bought a little fractional share in them. But yeah, year to date, we haven't even done, you know, we earlier were down like 14% year to date. But yeah, we're up 9% now year to date. Not too shabby. Google has just been insanely good. And yeah, here's finally our Moomoo buy never sell portfolio, which Comfort Systems is our main holding in here. Year to date, this has been our best performing portfolio simply because we haven't sold before today. Like most people, like, it makes sense. Like, if I didn't have the strategy, like, I would have at least trimmed Powell Industries, like, not just like fully sell them, but I probably would have trimmed a share, but I'm not going to do that. I'm just going to diamond hand these. Well, Powell Industries, I'm going to diamond hand forever, probably, unless something major changes for my like bull case or something major happens. Like, we have sold a few stocks here, but anyway, legit, you go to my channel like a year ago, we basically owned all these exact same stocks. So anyway, see you all later. Hope you have a great rest of your day. We'll be live. We stream every single day. I sell nothing. Of course, watch out for people impersonating me. If you hit the follow button, you might get followed by someone impersonating me. That's not me. But thank you. And thank you to everyone on the YouTube stream. Y'all are the best. Hey, see you later. Looney, James, Jay, Plasma, Goodwin, Victor, everyone on the YouTube stream. Thank you for being here. Oh, and if you haven't already, if you're still here, hit the like button on the stream. It still does help me out if you haven't hit the like